Pharma. And then you've got Lufthansa confirming its guidance, seeing strong demand through the end of the year. But those shares benefited from that cheaper oil day yesterday because of the Middle East geopolitics. Could we actually see a reversal of that today, despite these relatively healthy earnings, Anna?
Yes, and worth noting that in terms of yesterday's session, the way we come into today's session, energy was a real underperformer yesterday on the back of that weaker oil price. Does the buyback from BP, does that do anything to change that this morning? So the markets are open this morning, this Tuesday, and we are looking for a bit of that upside then. Critty was talking us through the futures picture, and we are looking for stocks to go a little bit higher here in Europe. So the FTSE 100 out of the gates, and it is higher by just 0.2%, waiting for the other markets to open up. The stock 600 overall, up by 0.1%. We've got that buyback theme running through from a number of the heavyweight sectors in Europe, but also some other earnings stories. Lizzie was talking about Novartis. That could be something that applies some upward pressure, although we're getting fairly used to, fairly accustomed to beats and beaten raise from Novartis in particular. The CAC 40 is open and is up by around 0.5%, so kind of on a par with many of the other markets. The IBEX in Spain up by 0.4%. So broadly speaking then, Critty, we see some strength, modest strength perhaps coming through across these equity markets as we really are in the heart of the earnings story today.
We really are, but at the heart of that earnings story, it's a tale of two commodities. And I think this is really interesting here because when you look at the FTSE 100, your biggest underperformer, your biggest weight on the index is coming from BP. Those numbers that kind of share buyback really not impressing investors. That kind of drop down you're seeing in the revenue numbers, also not a good one. But then to the upside, some of your biggest outperformers are the likes of Shell, for example. So again, maybe there's a little bit of a inverse trade there. HSBC as well, taking the cake from an index perspective, higher by 2% when it comes to the FTSE 100. And it feels like that's kind of the theme that a lot of these banking stocks and the rest of the market is really taking their cue from, Lizzie. And that's going to be crucial in terms of just some of the early kind of movement we're seeing in the earnings picture.
Yeah, so bearing in mind that we're still waiting for the DAX to open, if you break it down by sector across the stock 600, you've got all but two sectors in positive territory. Banks, as you say, leading the gains, higher 0.8%, really getting a boost from those HSBC earnings. But bottom of the basket, you've got basic resources and travel and leisure, only just in the red there. But if we look at some of these other stocks that are moving at the open, you've got, I wanted to know, Danone, because you were talking about the outperformance in the futures picture of the CAC.
Yeah.
And actually, this comes down to China, the Chinese government vowing more support for families with children. So Danone getting a little boost in Paris, higher 0.3% there.
Yeah, so that's one to watch. Keeping an eye on BP, and we are seeing a bit of negativity there. Now, they came out with a buyback that was in line with what the market was looking for, but there was an expectation, perhaps we get a bit of guidance around 2025 in the buyback. They're actually saying today that they're going to review the buyback plan in February, so we have to wait a little bit longer for that strategy update. And also the debt pile just growing a little bit, and that remains something of a preoccupation for those invested in BP.
Well, let's take a little bit of a quick check on some of the, you mentioned the outperformance of the French stocks as well. The only downside movers on the CAC 40 this morning are Renault and Stellantis. I think this is interesting. There's a little bit of a car theme there that we're seeing, perhaps a hangover from the Volkswagen story yesterday, continuing to be under pressure. The DAX is also open. Seeing green on screen there. Adidas, higher by 2%. We're going to dive into some of the earnings stories in just a moment as well. But for the meantime, let's get a little bit of a 30,000-foot picture. Mark Dowding, CIO at RBC Blue Bay Fixed Income, joins us around the table. You've picked a great day to join us. There's a lot of green on the screen, so the energy is high here. Let's start talking a little bit about how the bond market plays into the equity market story. And we say this in that we're in the countdown to the U.S. election. The bond market is very, shall I say, volatile at the moment, doesn't really know what to do or what to price in. Where on the curve could you see the most movement going into November 5th?
Well, so a great question there. I think the first thing that you'd say in terms of the interplay is that actually over the course of the past month, you've actually seen yields rising, largely because the US economy has been doing so well, hasn't it? Data has been relatively strong, and ultimately we need to remember all the time when it comes to equities as an asset class, it's all about earnings growing, as you're hearing about earnings growing this morning. And so if we've got growth, then that's going to lead to high corporate earnings. You're going to see equities in the green, aren't you? But in terms of the question, in terms about the part of the bond market that's going to matter next week the most, I actually think that in terms of the economic outlook, it looks pretty upbeat, relatively speaking, in the US under either Harris or Trump for the time being. Actually, some of the biggest changes could actually be more around foreign policy or trade. So I could actually see more volatility in FX markets than in fixed income markets. I would say, though, that if we do see Trump, do expect to see more of an impetus towards curve steepening, particularly if he ends up managing to make the sweep. That's the scenario that investors haven't really been thinking about thus far. I know markets have been starting to price a bit of a Trump victory, but if we did see a Republican sweep, that could be something that gives some of those Trump trades even more impetus than we've seen over the course of the past week.
So what does that Trump trade do then to the Fed trade? And I say this in the aspect or the angle of, we've heard from the likes of Jamie Dimon, David Solomon, among others, that the inflationary risks are more to the upside. Take geopolitical risk, take the deficit risk, the risk of tariffs as well. Does that cushion any move in the bond market as a function of a Fed cut?
Yeah, so in terms of the Fed, I think very clearly we're going to see the Fed cut again in November. If they don't cut in November, it ends up looking like the September move was a mistake. Doing 50 was a mistake. So I think 25 should be baked in the cake. But it's kind of interesting. If you look cumulatively at the next two Fed meetings, you've got around 42 basis points of cuts being priced. And so that expresses some degree of uncertainty whether we're going to see a follow-on cut in December. And I think that further sort of rate cuts are going to be much more data dependent. At the moment, it looks like the economy is doing really well. The stock market's had a high. Credit markets are doing well. This economy doesn't need a lot more sort of monetary stimulus. So from that point of view, I'm not sure that we'll be seeing a lot more in terms of Fed rate cuts in the months ahead, unless there's a much more material slowing of the economy.
Mark, you've written about the potential hit to the Eurozone economy from Trump tariffs. If he is elected, I wonder how soon you reckon it would light a fire under the ECB to get in there with a bigger jumbo cut?
I think that's a really good question. So I would say here that if we end up with Trump winning, obviously he doesn't take office until January, does he? So thereafter, I think it's going to be a couple of months before we see actually anything done on tariffs. All of that said, I think the fact that Trump takes office is going to be a catalyst for maybe Christine Lagarde to get her revenge in early. Why not go for 50 in December? Actually, I mentioned the pricing of the Fed over the next two meetings. In the ECB, you're pricing now 62 basis points of cut. So markets are starting to think that you're going to see a 50 at the December meeting or the January meeting. So this is something to be looking for. But in a way, if this ends up weakening the euro, it means it's going to be better for European exporters. We've heard how many European exporters, particularly in Germany, are really struggling really badly right now. So I'm sure they would welcome that. Furthermore, if you do end up weakening the euro a bit, it might actually cut off Trump's ability to actually move forward with those tariffs and actually sort of push things even further. So I have to confess at the minute, I'm a little bit surprised that given that the race has been going Trump's way, I'm surprised that actually euro-dollar is holding up as well as it is.
Okay, really interesting. Christine Lagarde's early revenge. But I want to keep you in Europe and switch focus to the UK because, of course, we've got the budget. Do you think that Rachel Reeves, whatever she does, is going to be shrugged off by the gilt market?
Yeah, so we've heard a lot, haven't we? A lot has been leaked over the course of the past week, and so I think broadly speaking, the contours of what is going to be announced yesterday are now largely in place. There are going to be questions around what does this mean in terms of gilt issuance, what does this mean in terms of front-loading spending. So there's still going to be a lot of interest in the details. I think the one thing that does trouble me, though, is that a lot of the analysis in the UK budget is assuming that interest rates come down nice and happily because inflation is coming down. But I do see, notwithstanding the last inflation print, still a bit of a nagging doubt that inflation in the UK may remain a bit elevated. And ultimately, if you're sticking on sort of additional costs to employers in terms of national insurance contributions, that's another reason why you might actually see businesses move to pass on those sorts of costs. So I'm a little bit wary of assuming that you have this very benign trajectory in UK inflation and UK interest rates. And for me, that's where you could actually see some risk to the budget, because interest rate expenses are now such a big budget item, aren't they, in the UK? And so if we end up overshooting there, that's going to end up limiting the room that Rachel Reeves has. And so from that point of view, and given what we saw in 2022, I still think at the back of the investors' minds, there's still a bit of ongoing vulnerability there.
So some ongoing vulnerability. So, Mark, does that leave you playing gilt markets into the budget or leaving it well alone for now?
So at the moment, I'm happy leaving it alone. At the moment, I'm not sure that there's such a clear trade. I would be more inclined to actually be positioned short in the British pound, again, relative to the dollar. We like the dollar as a theme going into the US election. But when it comes to the gilt market, I'd infer that the Bank of England, Andrew Bailey, seems like he wants to cut. He wants to be dovish. I think we will see a rate cut at the November meeting. But thereafter, I think it's going to be sort of more questionable about how much more can actually be delivered. So I'd be more inclined, if you push me, to be on the short side rather than on the long side of British gilts. But at the moment, I think there's probably more asymmetry in the pound than there are in gilt prices.
A lot of the focus on the rising yield story, this is going back to the US more broadly, has focused on the possibility of this being Trump trades. You acknowledge that, but also the strength of the US economy and some of it perhaps coming from that direction. We don't seem to talk but the election is still on a knife edge, of course, and we don't talk all that much about Harris trades. Some people talk about the fiscal story being live, whoever ends up in the White House. If we do get a Harris victory, what's mispriced at the moment? What moves?
So that's another good question. I think that if we do see a Harris win now, it will come as something of a surprise. I think that we will see a weakening of the dollar in the short term, albeit I'd say that if growth remains strong, US growth exceptionalism in the US is probably going to see a bid then return to the dollar after some initial weakness. But you will see that move. I think you'll probably see bond yields moving a bit lower. There is this fear that Trump will be more inflationary, and putting that fear to bed, you could see bond yields go down. You may see equity markets retrace. Equity markets have been pushing higher. And of course, the Bitcoin's going to go down, isn't it, if Harris comes in. So there'll be a reversal of some of the recent trends that we have been witnessing. But the one thing that I would infer is it doesn't really matter too much to me who wins this US election in terms of fiscal policy. I think that fiscal policy is going to be profligate regardless. We're going to see a 7% budget deficit next year, almost regardless of who wins this election. So I wouldn't really read into this a narrative that actually a Harris win here is going to be a really good piece of news for the long end of the bond market.
All right, Mark Dowding, CIO at RBC, Blue Bay Fixed Income. Great to have you on the programme in such a busy week for looking ahead to the US election, as to that UK budget as well. We thank you as always. But I want to get back to the earnings picture, because we have had a raft of results this morning, not least from Novartis, and those shares are down 3.6% currently, despite having boosted its annual profit guidance this morning for the third consecutive quarter. The Swiss drug maker seeing gains from rising sales of its blockbuster drugs for psoriasis and cancer. But let's take a look now at what is really putting a bad mood on the market for traders this morning. We can speak to the CEO, Vas Narasimhan, CEO at Novartis. Welcome to the programme, Vas. You've raised your prospect guidance for the third straight quarter. Traders not convinced. Tell us about your outlook for the year ahead.
Look, we had a great quarter three, and when you look at the last 2 years, we've had consistent, very strong operating performance. Currently in the quarter, we grew 10%. Year to date, profits are growing 20%. Very strong pipeline and growth performance from our key growth drivers. So we feel really good with where the company is at the moment. We've been able to raise both top and bottom line guidance. And I think importantly as well, that keeps us on our trajectory longer term to deliver on 5% sales growth out to 2028 and achieve a core margin of 40%. So we've had great momentum completing 2024, and we should be able to continue that momentum into 2025.
Well, I think from analysts' notes, what's worrying them in particular is the expiration of these US patents. What reassurance can you give investors there?
Look, patent expiries, of course, are part of our business. What's exciting for us, coming out of 10 positive phase 3 studies, we have now these new growth drivers that allow us to replace our sales. So given that, we expect to be able to grow in 2025 on the back of such great performance from our breast cancer medicine, Kisqali, which recently got expanded into early breast cancer with an approval in the United States and a positive opinion in Europe. Very strong performance from Cosentyx, our immunology medicine that's looking really strong in the US and in Europe. Kesimpta, our multiple sclerosis medicine, and every one of these medicines have protection into the 2030s. And then we have some new launches, a drug called Fabhalta, another drug called Scemblix, also with very long patent life. As those medicines ramp, it's a normal thing in our sector to have to overcome near-term patent expiries. So what is, I think, strong for our story is we can maintain a 5% 5-year sales growth CAGR despite having some expiries next year. So really good underlying performance and a long-term trajectory that I think is positive.
Vas, any further guidance you can give us further down the P&L, though? Because you referenced the years ahead sales guidance there, but I think the market looking for a little bit more commentary on 2025, given we have those patent expiries, Entresto and Promacta being mentioned by some of the analysts this morning.
Yeah, absolutely. So already you've seen year to date, we're at 39.6% on the core margin. We've committed to getting to 40% by 2027. Actually, in quarter 3, we actually were above 40%. So we feel very comfortable. We'll see consistent margin expansion over the coming years. That consistent margin expansion should comfortably get us to that 40% plus margin. And of course, if we can go higher while fully investing in R&D and marketing and sales, we'll certainly do that. So I think the sales growth and the margin expansion delivery is continuing consistently. So yes, we'll have some expiries next year, but I think for long-run investors, we make an outstanding value proposition.
Okay, and a little more on the cost side of things. Some analysts do quote, Vas, that your management's strong control of sales and marketing expenses has significantly benefited the 2024 profitability outlook. Do you see all of that as something that you can continue, something that can be replicated?
Look, I think we've consistently delivered that margin expansion. If you look over the last 8 years, the margin expansion in the company is over 1,200 basis points or 1,000 basis points, certainly. And I think that demonstrates we have strong cost discipline and we can drive the top line while maintaining relatively steady marketing and sales expenses. So our expectation is with all of these new launches, we'll still be able to manage our M&S and G&A lines, maintain $10 billion of R&D expense, and then as we grow the sales, they'll continue to flow to the bottom line and lead to strong profit growth. You also saw extremely strong free cash flow in quarter 3. We have a balanced approach to our capital allocation, which allows us to maintain a strong growing dividend and continue share buybacks as well as M&A as appropriate. So I think that overall story from a cash flow generation and operating income is very strong.
Vas, before I want to ask you about the obesity pipeline in just a moment, which I know you've briefly touched on. But before we do, I want to circle back to that visibility into the next couple of years. And I understand that you have a big drug pipeline to kind of cushion perhaps some of the patent volatility there. I'm curious how a new administration may change that in the United States, given the FDA and the regulations there are also expected to change in 2 months, depending on who we have in office.
Yeah, I think regardless of who wins the presidency, our big focus is on legislation that hopefully continues to improve the overall innovation environment in the U.S. We want to see PBM reform passed. We want to see 340B, another government program in the U.S., reformed. And we want to see the IRA shifted to better balance small molecule and large molecule medicines. But we factor all of that into our pipeline and factor that into our guidance that we've now given. So I think regardless of who wins the election, we should be well, I think, positioned to do well in the longer term. What I think will be really important now is that we keep the innovation cycle very fast, because with the IRA, certainly the timelines we have for some of our medicines industry-wide is going to be compressed. So the winners are going to be those who can consistently deliver on their pipeline quickly.
Well, let's dive into that pipeline then, because again, I'm going to connect those two issues. Some of the key regulatory issues for some of your other pharmaceutical peers is around the obesity drugs, where so much of that consumer demand comes from the United States, and of course subject to those kind of regulations. You're actively saying that your pipeline isn't really dependent on the obesity story, but do you think Novartis may be missing out on that wave, that yes, you may be treading water and you may be having other exciting drugs in the pipeline, but not able to fully capitalize on that trend and the kind of unwavering demand you're seeing from the States?
Look, I think we're at peak obesity hype cycle, and I think one of the things I've learned over the years in our sector is you have to continue to invest where you have a unique advantage. In obesity, in this first wave, it's very well serviced by companies that have launched the first generation of injectable and likely oral GLP and GIP-1 medicines, and we'll see how that market evolves. Also, I think in general, analysts have very bullish forecasts, and then as the reality sets in, we'll see how the market develops. I think what's important for us is to invest heavily where we have an advantage. Radioligand therapies, we're the market leader. This could be a $20 billion segment for the long run. CAR T, so cell therapies for immunology, again, we're a leader. siRNAs, so small interfering RNAs for a range of diseases, we are one of the leaders. Cell and gene therapies, we're one of the leaders. So investing in those areas where we can build an advantage for the next decade is what our focus is.
Vas, give us a final update on Pluvicto in particular. Your numbers came in slightly above the estimates when it comes to that drug. What does the growth cycle look like? What does demand look like? A Pluvicto update, if you will.
Yeah, Pluvicto, our radioligand therapy for prostate cancer, I think a revolutionary medicine. We see steady growth, and we expect quarter 3, quarter 4 to be largely in line. But what's exciting is the new indication, which we announced today that we filed, which will hopefully get approved in the first half of next year. That triples the population eligible for Pluvicto. Then we have another 2 studies that are on track to be reading out in 2025 and 2026. Will give us more expansion of Pluvicto. And then behind that, what's probably not been fully appreciated by the markets is the scale of our radioligand therapy pipeline. We have now 7 different medicines in the clinic that target a range of solid tumor cancers. And I think the opportunity there to build a lasting leadership position in radioligand therapies, while the world is focused on obesity, we'll hopefully be able to address a whole range of cancers with a revolutionary technology.
All right, Novartis CEO Vas Narasimhan joining us on the program with some pretty lofty goals. We appreciate your time, as always, after their earnings report. Shares still down over 3%, though, of course, as we interviewed him. Sticking with the earnings story, so what's coming up on the show? We're going to go from pharmaceuticals to banking. A closer look at the earnings results of HSBC, one of the best performers on the Stock 600. Santander, on the other hand, one of the worst. We're going to dive into the banking sector next. Stick with us. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the open and bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger. Their incomes didn't go up for 20 years. They're the ones who have more crime-ridden neighborhoods. Their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it, on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid.
Easier access to space means more demand for space, and that's the definition of an exponential growth function.
I think that's what's so exciting from a business perspective. If you can do it, you're one of the few numbers of organizations in the history who've actually pulled it off.
Don't miss Bloomberg Technology live every weekday.
Welcome back. This is the opening trade, Tuesday, 29th of October, and we see European equity markets are a little bit, we see them stronger this morning, in fact. 24 minutes into our trading day, let's get an update on stocks, individual stocks on the move. Here's Joe Easton.
So we got really different pictures in the UK banking stocks today. HSBC rising, pretty much what we saw with the Hong Kong shares, gaining almost 4%, better than expected net interest income, and also that $3 billion buyback boosting that one. But Santander going the other way. Now the lending margin's a little bit weak, but also you have to suspect that the halting of the UK results is weighing on that company. I know you were discussing with the management earlier. He gave a figure somewhere around 600 million wouldn't be material for the company, but we don't yet know how much that is going to cost. So it is one to keep an eye on in Santander. It seems that is taking some attention away from the main group results today. Then in Germany, we've got another couple of stocks going in different directions. Lufthansa, now this one weakening. They are kind of guiding towards lower capacity in the year ahead, according to analysts. Also, their costs are higher, excluding fuel, though. It looks like wages potentially weighing on that one today. Adidas, meanwhile, continuing the rebound. Remember, this one slumped a lot a couple of years ago when they ended their partnership with Kanye West or Yeezy, but it has risen around 50% over the past year or so, and it's gaining a bit more now following some better than expected sales from that company. Then over in med tech now, this is actually, believe it or not, something we don't cover too much. It's dental implants, but it is a $20 billion company listed over in Switzerland. We've done Novartis, but the big one moving lower is Straumann, dropping. That's the biggest decline in around 6 months for Straumann today. A big decline for that one. Finally, one morning call. We're all looking ahead to the budget tomorrow. Will we get news on inheritance tax? Will we get news on capital gains tax? Bank of America downgrading St James's Place to neutral from buy ahead of that, and that stock falling 3% on the London market ahead of that key budget tomorrow morning.
Joe, thank you very much. Yes, we'll certainly have a lot of focus on that in tomorrow's programming. In terms of where we are across European equity markets right now, giving up earlier gains, pretty flat now across the stock 600. More on the markets when we return. We'll also talk about the US elections. With just a week to go now, we will dive into what's at stake for relations between Washington and Brussels. We'll be joined by Bruno Machaich, Senior Advisor at Flint Global and former Minister of European Affairs in Portugal. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never. Ready? Go.
If you get a call from Joe Embiid, your star player, and you get a simultaneous call from one of your children, which call do you take first?
I'll pick up my son really quick. Okay, can I call you back? I'm on with you.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
I think we have to be lucid on our situation. Europe is no more the top priority of the US. The US top priority is US, which is normal and fair.
Look, almost any way the American election comes out, I think there's a recognition in Europe that we need to be more agile, more dynamic, more competitive, not just against the United States, but also against a rising Asia. And that's, I think that's very clear. People are aware of the change, getting ready for what lies ahead.
We'll work with our American partners independently for who will win the election. So Biden administration was able not only to protect the American interests, but also to keep alive and even strengthen in some way the multilateral framework.
European business and political leaders speaking there about the upcoming U.S. election and what it means for the region. Of course, we're only 1 week out until Election Day in the United States. We want to zero in on what's at stake for relations between Brussels and Washington as part of our daily series focusing on the issues facing Europe in the battle between Kamala Harris and Donald Trump. We're joined now, I'm pleased to say, around the table by Bruno Massaish, Senior Advisor at Flint Global and former Minister of European Affairs in Portugal. You have a very, very clear and kind of poignant take on how Europe is going to be interpreting this. And it feels like what we've heard time and time again is that a Trump 2.0 is a bad thing. Is it as simple as that?
I think it is. You know, the relations were very good over the past 4 years. You had people like Anthony Blinken, Jake Sullivan. They were Europhiles. Blinken, a fluent French speaker. Sullivan talked to von der Leyen, I'm told, once a week, once every other week. It's not going to happen. People around Trump, I'm not going to give names, but people around Trump, there are a lot of people that could qualify as Europhobes. They really don't like Europe. And so the policy is going to be dramatically different, I think, on an everyday basis, but also long-term measures like tariffs are going to have a huge impact on Europe.
So one of the, and we played some sound there from Emmanuel Macron, but one of the arguments in Europe here as well is that in the absence of that, perhaps, alliance that has been so strong for so many decades, you could start to see Europe kind of catch up a little bit. But does that catch up, is it restrained or is it limited by the fiscal handcuffs that a lot of these European nations have? Is this a little kind of lose-lose situation at the end of the day because of the budgets?
Yeah. We saw in the Draghi report that was published a few weeks ago, he called for more investment, stronger industrial policy, but that can't be done with the restraints that we have. So even someone like me that 10 years ago, we're trying to solve the Eurozone crisis, that was a different time, and I think now we need looser policies if we want to catch up with China and the U.S.
And thinking about how Europe prepares, then, Bruno, for another Trump presidency, if that's what we get. I mean, the whole thing is on a real knife edge, isn't it? But if we did see another Trump presidency, you've been talking to people in Brussels recently. Are they preparing for Trump 1.0 again, or are they preparing for something very different?
They're still optimistic. They think they can talk to Trump. And last time around, in the end, it wasn't that bad. Remember, Jean-Claude Juncker was able to talk to Trump. They apparently became very good friends. And Trump, remember at the end, there was a discussion about imposing tariffs on autos, German auto industry, and Trump never did it, in part because COVID happened and he was busy with other things. So last time around, he wasn't as dramatic as some people feared, and there's optimism in Brussels that you can deal with Trump. There's a discussion going on whether you should be tough or conciliatory, whether you should offer or transactional, whether you should offer Trump something or whether you should, put some threats on the table.
I mean, that's the word that's used often, isn't it? Transactional. That he will come at you hard with some policy. He may intend to implement that policy, or he might just be looking for something from you to stop him doing so. So are there a lot of people in Brussels, then, that are counting on him being quite transactional?
Yes, and you could offer Trump more access to the European market for American agriculture, for example. This is being talked about in Brussels. There's a difference, a dramatic difference from last time. That's Ukraine, where the emotions are very high and where Trump could really force us Europeans to change our policy in ways that we don't want to do it. So that, I think, is going to be different from discussions about tariffs and others where, in the end, the transactional approach could work, but on Ukraine, it won't work.
Well, how fast are they planning for the commitment in Washington to NATO, to Ukraine, to unravel if Trump's elected?
Right. It's not so much that he would get out of NATO, but that NATO would be less active, less visible. That many of the discussions there would be frozen, paralyzed. This is what people worry about. On Ukraine, Trump has already been clear that even before he takes the oath in January, even before that, he will try to reach a deal with Putin. So at that point, all options are open. It will become very difficult. Many European countries will be firmly against such negotiations. Others will jump on board. This is another problem, that Trump will most likely divide Europe. People are worried about that.
But I mean, for as clear as you're being about Trump 2.0 being a bad thing for Europe, I thought your New Statesman essay was fascinating. You said, no one you know is voting for Kamala Harris. Do you want to share with our viewers why you were so convinced? What about what you saw in Michigan? Why you think that Trump's so appealing to the low-income vote?
So I went to a Trump rally in Michigan. I recommend to everyone to go. It's incredibly educational. And what you could see is that Harris has a lot of problems. The auto industry in Michigan is suffering. People in general are suffering. Inflation has been a huge drag on people's plans and economies. And then, of course, there's the question of Gaza. So Michigan has about 300,000 Arab Americans. And what I saw there is that, people talk about Gaza and Lebanon all the time. They go to funeral services of people that died in Gaza or Lebanon. And these people tell you that they will never vote for Harris. They won't vote for Trump either. But if they don't vote for Harris, it's, 300,000 votes potentially. It could decide the election.
Let's bring it back to Europe in particular here. When we're talking about how the EU is now interacting or responding to things like tariffs or overcapacity, we've seen them been able to pull certain levers with the likes of China, for example. What levers can the EU pull with the United States?
It's very difficult. So you can appeal to the values of the transatlantic alliance. That doesn't seem to work very well with Trump and the people around him. I think last time around, Trump in the end got a bit worried that the EU also has some economic clout and it can punch back. And that's probably where Europe can, if it's done diplomatically and behind the scenes, can explain that it's also possible for the EU to apply tariffs to the U.S. on some, to pick some constituencies in the U.S. that would suffer and constituencies that are close to Trump. So I think this is the strategy that has to be developed. I'm told there are already working groups that meet once a week in Brussels to try to to decide how best to do this. But again, there's this divide. Should you be tough or should you be transactional and even have sort of a charm initiative to try to bring Trump online? I don't see anyone in Europe that can do that. As last time, there were a few people, including Boris Johnson, famously, but also Jean-Claude Juncker. This time around, I didn't see a candidate to play the role of bridge between the EU and Trump.
It's a crucial point that you bring up, the carrot or the stick. What is the most effective strategy? Right. The stick being, of course, the Trump 2.0, but it feels like we've done the carrot as well under the Biden administration, the likes of the IRA, for example. So if Harris does continue that policy, if the EU can't retaliate with tariffs or levies or quotas or whatever that may be, can they subsidize domestically to kind of counter some of the incentives you get in the IRA?
It seems very difficult, right? The news we get from Germany are not encouraging. The economy is in really bad shape, and there's no fiscal space whatsoever. Until the elections, there won't be any changes in how the current government approaches fiscal policy. So I don't see any chances of doing that. By the way, with Harris, we shouldn't assume that everything is going to be as good as it was with Biden. Harris is a very different politician. She won't invest the same kind of capital that Biden invested on the Ukraine policy. She will try to continue the policy, but she won't invest the same kind of capital, and she won't go against a Republican Senate and a Republican House in the way that Biden did. So I think there's trouble ahead, no matter who wins.
Where does the military story in Europe go then, with that in mind? Because for years, some have called for, and the French have been vocal on calling for Europe to have more of its own cross-European, pan-European military capability. Others have been more sceptical of that. There's the NATO umbrella currently, but that could be furloughed, as you suggested. So where does that leave Europe and its build-up of military capability?
We have to build up. One diplomat from one of the major countries told me last week in Brussels that we have to align with the U.S. on China policy because we're under threat from Russia and we need the American nuclear umbrella. So until we have our own nuclear umbrella, we're extremely dependent. So this is how people are thinking. It's obvious that we need to become less dependent on the military side of things so that we can become more sovereign on the economic side of things, but it will take time. And of course, it will be difficult because even that independence, I see the latest numbers, maybe 35% of weapons procurement comes from European industry. That has to be increased dramatically. Otherwise, we remain dependent.
Will that be the aim, though, to get that level of independence for European foreign policy and military policy? That hasn't been the case for decades, obviously.
We may have the same decisions that the U.S. has, but we need to have the capacity to be on the table and to be taken seriously by the U.S. This is the mainstream view in Brussels right now.
So one of the key issues that I think is going to be top of mind for a lot of the Europeans as soon as the new president is elected, in addition to defense spending, is going to be what happens to steel tariffs and liquor tariffs as well in retaliation. What is the kind of touching point there? How do you see that getting resolved, if at all?
I don't see that getting resolved. I see new problems piling up. So Trump has announced that he will have a 10% across-the-board tariff, and that will also impact European industry. We're seeing forecasts and studies showing that perhaps 150 billion of EU exports to the U.S. may be affected, may be reduced. That's about 25% of our exports to the U.S. So this is the kind of numbers that are being talked about. With Harris, I think we'll have more continuity. But, we saw that Biden didn't really remove the tariffs that Trump had imposed. And I think Harris will be politically weaker than Biden. And I don't see her being able to changing some of these fundamentals. It's very obvious in the campaign that what is coming from the American public is more America first. That's what I saw in the rally. People are suffering in some of this industrial heartland in the U.S. And they want more tariffs. They want more investment in U.S. industry. They want more retaliation against other countries. And so this is the landscape no matter who wins.
All right. Bruno Massaish joining us around the table, Senior Advisor at Flint Global and former Minister of European Affairs from Portugal, of course, giving us some real insight into how the Europeans are thinking. He's not the only one. Of course, the election is top of mind around the world. Citadel's Ken Griffin spoke earlier from FII in Riyadh. Take a listen to what he had to say about the U.S. election.
The expectation today is that Donald Trump will win the White House in just a few days. We'll know shortly. And big picture, the reduction in uncertainty is almost always positive for asset prices. And we're at that moment of peak uncertainty. It is a race that Trump is favored to win, but it's almost a coin toss.
All right, Ken Griffin there, the founder and CEO of Citadel, talking about the fact that he's actually expecting Trump to win. And this is what you're seeing in the betting odds, this is what you're seeing in the financial community, even though the polling odds are still 50-50.
And he did say that as well, didn't he? That, it is a bit of a coin toss. I thought it was interesting with that in mind, talking to Blue Bay earlier on and saying, okay, so if the markets are increasingly talking about a Trump win and positioning around that, what does it look like? What is mispriced if we get a Harris win? Because that, for the market, has to be something of a concern. And he was talking about how, that might be dollar weak in the very short term, but then the growth story comes back and actually the dollar picks up again.
I mean, just as a British observer, Critty, I thought it was really interesting when you were pointing out to us off-air the other day the difference in importance of betting odds in the US election. Do you want to just briefly tell us why?
Yeah, sure. I mean, this is kind of my big pet peeve here. I mean, betting on the election it's basically gambling in the United States. You're not really allowed to do it to the same extent that I think you are in other parts of the world as well. It's crucial as well because so many of the financial community look at betting odds, but it's a very light pool of people, and it's largely kind of driven by a lot of international. Yes, and it's driven by a lot of international bettors as opposed to domestic bettors.
I thought that was fascinating. Such a crucial part of British culture, gambling. But we're going to keep getting back to the gambling on the stock story later in the programme. We've been looking at Lufthansa shares off the back of their results this morning, actually lower despite the airline reporting third quarter revenue on strong travel demand. So we'll dive into what's happening at Europe's biggest airline group next. Stay with us. This is Bloomberg.
Prided myself, probably wrongly, having worked in many countries, been brought up as a child in the Middle East and in the Far East, having a mother who was not British, she was Hungarian, she was a survivor from Auschwitz, and I was the son of a Holocaust survivor, and being involved with lots of people, I thought to myself, I know a lot about diversity. And I know about inclusion and not being included. But actually, when I came out, I realized that my level of understanding was not very high. And actually, I could see both the support and the rejection of being different, and what you had to do to live a life where you were different. And I'm immensely pleased that I was outed when I was 60, just under 60. Because had I not been outed, I probably would have said I could stay in the closet and still believe that I knew everything, which I didn't. And that was a very important moment for me.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
There's no question the deal-making environment is improving, and And when you look at what's going on with technology and the investment that's necessary, to power AI, I think that's a tailwind for deal making over a period of time too. A lot of change, a lot of opportunity, and when there's change, leaders are constantly looking to make sure that they're positioned strategically to have a leadership position as the world evolves.
Well, I know you've also been making a big push into your alternatives business. Private credit is an area of focus. What is the opportunity that you see there? Because it really feels like that has become the major focus of the market. Many different players are looking to get involved in that space.
Well, we've been in the private credit business for over 30 years. We have $140 billion of private credit assets. We've been a leading private credit player since the 1990s. What I would say is there continues to be secular growth around the opportunity set for additional private credit formation, and we're very, very well positioned, given the way the firm sits, to be a very, very unique player in that. Obviously, in our asset management business, we manage significant private credit assets, but we also have one of the leading syndication franchises. So we have an ability to originate and distribute in addition to be an investor through our asset management business. That's a very unique combination. I think it positions our firm very well. And you will see, in my opinion, continued secular growth in private credit formation. I still think we're early in that cycle.
What do you think lower interest rates do for the private credit landscape, though? Doing so much of the debt is floating.
I think that private credit, it's not immune to lower interest rates, but there are different ways that we can finance activity. And private credit's a very important part of that. People use private credit as a very, very broad term. Are we talking about insurance companies financing investment-grade companies? Are we talking about investment-grade financing? Are we talking about below investment-grade corporate financing? Are we talking about direct lending to small and medium-sized enterprises? These are all different forms of private credit. And the reality of it is, regardless of what the interest rate environment is, people need to finance. And so, of course, in the short term, movements in interest rates have an impact in short-term activity. But we're talking about the engines of finance that drive capital structure in a whole variety of ways. This is not something that's cyclically tied to short-term interest rates.
Goldman Sachs CEO David Solomon speaking exclusively to Bloomberg in Riyadh. That conversation coming to us from the Future Investment Initiative taking place there in Riyadh. Let's have a quick look at where banks are trading, because there they talked about the interest rate environment, and that very clear having an impact on Banco Santander. Third quarter earnings came in this morning with a little bit of disappointment around the interest income amid the shift to the lower interest rate environment. And that, plus the fact they delayed their UK earnings because of that motor finance ruling at the back end of last week, both of those factors weighing on the Santander share price. On the other hand, HSBC doing well on the back of the Chinese push towards stimulating demand in that economy. It certainly got people excited about Chinese stocks again. And HSBC's doing well on the back of that, plus a buyback in the mix as well. So we see mixed fortunes for European banks then, Lizzie.
Yeah, sector-wise across the Stock 600, you're looking at travel and leisure at the bottom of the basket, down 0.4%. And within that basket, Lufthansa shares at the very bottom, down 2.4%. And that's actually despite reporting record revenue in the third quarter. So 2.5% down this morning, specifically for Europe's biggest airline group. And it actually said that it plans to increase capacity in the fourth quarter and that bookings for November and December are above last year's level. So let's make sense of this. We can bring in Bloomberg's Oliver Crook from Berlin. Ollie, just talk to us about the discrepancy here between the share price moves and the results.
Yeah, so listen, in terms of the results themselves, they were really a confirmation of the guidance that we got from Lufthansa, but we should say there was already a reduced guidance that they gave back in the month of July, because it's been a sort of very difficult start for the airline industry and Lufthansa more particularly. What I think is interesting, and I think you pointed to this in the introduction there, is that they did have record revenue in the third quarter. However, if you look at their EBIT and their profit, that actually dropped from a year earlier, which would indicate that despite the fact that that revenues are rising, that actually that profitability is being squeezed, in large part also due to costs, right? This is one of the issues. The other thing that they're pointing to, though, is despite the sort of harder beginning of the year, that they're actually going to be able to increase capacity in the fourth quarter. They expect that demand to sort of steady out. And there are a couple of other interesting kind of smaller notes within the earnings release that I think are worth mentioning. That demand, particularly for business and for first class, is continuing to hold up. So the upper end of the segment is still doing well for Lufthansa. And the last one I thought was interesting is they've canceled their daily flight from Frankfurt to China, in large part because of fuel costs, because they can no longer fly over Russian airspace.
Ollie, talk to us about the other major German earnings story this morning. That, of course, is Adidas. Shares higher by about 1%. What's going right at the shoemaker?
Yeah, if you look at their earnings release, it seems like there's actually quite a bit that's going right. So overall, they did sales that were up by 10% in the third quarter, which was a confirmation of what we heard from them in their pre-release a couple of weeks ago. Their gross margin shot up to 51%. That's up 2 percentage points from before. And of course, what we're always watching, Kriti, when we're watching Adidas is the revenue that they get from that Yeezy inventory after that relationship sort of exploded catastrophically last year. They still made 200 million euros worth of Yeezy merchandise that they were able to sell. If you look at the regional breakdown, this gets quite interesting. In Latin America, they're up almost 30%. Europe up 18%. China, even despite the sort of struggles there for the economy, up 9%. And North America, down 7%. What's interesting, and this gives us the opportunity to use our favorite earnings term, ex-Yeezy, actually North America would have been positive territory, but because of the terrible comps year on year, that actually was put into negative territory. When you compare them to their sort of big brother, if we can say Nike, and you look at the market cap between these two companies and what we've seen over the last couple of years when the new CEO has taken over here at Adidas, there used to be a $200 billion market cap difference between these two businesses. You can see there on the right end of the chart, that has narrowed to just about 80 billion euros, which isn't nothing, but really tells you sort of the difference in fortunes that we're experiencing right now between Nike and Adidas.
All right, Oliver Cook in Berlin, we thank you so much for breaking down two of the major earnings stories out of Germany this morning. As we, of course, monitor those share prices, let's talk about what we've got in the day ahead. A lot of the focus switching over to what's going on in the States. At about 2 p.m. UK time, you do get the JOLTS and consumer confidence data as well. It'll be about 10 a.m. local in the United States. Plus, like those consumer confidence numbers as well, plus a slew of earnings. McDonald's, Chipotle, Visa, PayPal, really getting a take on the American consumer. Plus, of course, the highlight, I think, maybe of the week in the earnings picture, and that, of course, is Alphabet tech earnings alongside Snapchat and AMD. What does that say about the consumer? What does that say about ad revenue? And, of course, the major cloud services that Alphabet is trying to break into. In the meantime, let's dive deeper into what markets are expecting from some of that data that we're going to get. Bloomberg's Valerie Teitel joins us around the table. It's an exciting 9 days, I guess, in the bond market. What is going to be the most volatile for the bonds?
Look, we get a lot of labor market data out from the U.S. today that has a tendency to have surprise. It surprised us last month, coming in strong, showing a tightening labor market. We're going to be very sensitive to any more hints if this is a sustained move in the U.S. labor market towards tightening, or if all last month's data was just a blimp. It starts today with the JOLTS data, then we get the private payroll data on Wednesday, followed on Friday by the big non-farm payroll report. We're going to be looking at the job openings per unemployed worker, and the data out today. It has seen a teeny tick higher in last month's data. Bloomberg Economics does see it ticking higher again today, but does not see that tightening move in the labor market to be sustained in the coming months.
So we are seeing that yields are ticking a little higher this morning over in the United States, and I think the same applies to Europe and the European scene. Is that just read across from that global bond story, or is this a more European dynamic?
Look, we're seeing a decent underperformance in European bonds this morning, and it makes me think that we're starting to see some profit taking ahead of the U.S. election. We know that a very consensus position has been to be long European bonds, be short treasuries, because of the growth dynamics diverging and the monetary policy dynamics diverging there too. That 10-year spread has moved 60 basis points nearly in a straight line just in the last month and a half. So, you know, is this maybe a sign of what's to come, Anna, this week, that we could be seeing more profit taking on these Trump trades as we get closer to the election, and investors want to de-risk ahead of the biggest event risk of the year?
Okay, Valerie, thank you very much. Valerie Teitel with the latest on the markets. A lot to think about then when it comes to some of the data, the Fed conversation.
Yeah.
That's even before we get to the election. You know, there are just so many moving parts for bond markets to keep an eye on for all asset classes. We've seen Bitcoin, of course, on the rise.
Yeah, but in the face of all the volatility, you're still seeing green on the screen in this equity market and real outperformance in those French stocks as well, which we, of course, know we took a very big beating in last week's trading as well. This morning, you're seeing the CAC 40 higher by about 0.6%. The underperformer, ironically, is the FTSE 100. That really is a tale of two oil stories, not to mention a tale of two banking stories. All of that and more. We're monitoring the oil prices, the banking story, and, of course, the bond market in the hours to come. Stick with us. Does it for the opening trade. This is Bloomberg.
everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
If you go back to PCs, now I know a lot of people have, especially if you're using the Linux analogy, people don't necessarily consider Windows to be maximally open, but compared to the Apple approach of kind of coupling your operating system with the device, the Windows approach was a more open ecosystem, and it won. And part of my hope for the next generation of platforms, which includes both AI and the work that we're doing in augmented and virtual reality, is to, Meta wants to be on the side of building the open ecosystems. And it's not just that we want to build something that's an alternative to the closed ecosystem. I want to restore the industry to the state where the open ecosystem is actually the one that is leading. So I think it's possible. I think we'll, I think we're making good steps on that in both AI and AR and VR. But that's something that I just personally and philosophically care about, given the kind of limits on creativity that I've felt have sort of been applied to our industry by the closed model of mobile development over the last 10, 15 years.
I want to go deeper on that point that you just mentioned of restoring the industry to the state where the open ecosystem is the one that's leading. And so obviously right now we have Llama 3.145B, just came out. It's competitive and it even beats some of the best closed models across key benchmarks, which is insane in its own right. But in your letter, you also mentioned that Llama 4 is expected to become the most advanced model in the industry. Are there any specific things about Llama 4 that you're really excited about?
Oh man, I mean, it's we're just doing 3.1 for Llama now. I think it might be a little early to talk about Llama 4, but we've got the compute cluster set up. We've got a bunch of the data set up. We kind of have a sense of what the architecture is going to be, and have run a bunch of research experiments to kind of max that out. So I do think that Llama 4 is going to be another big leap on top of Llama 3. I think we have a bunch more progress that we can make. I mean, this is the first dot release for Llama. There's more that I'd like to do, including launching the multimodal models, which we kind of had an unfortunate setback on that. But I think we're going to be launching them probably everywhere outside of the EU, hopefully over the next few months. But yeah, probably a little early to talk about Llama 4, but it is going to be awesome. And it has been one of the interesting things in running the company is basically planning out the compute clusters and data trajectories for not just Llama 4, but the next probably 4 or 5 versions of Llama, because I mean these are long lead time investments to build.
This more pricing in of not just a Trump presidency, but a Republican sweep. The betting odds, which we've talked about, quite idiosyncratic, have pushed up something to like a 48% of a Republican sweep. And that's given us the more juice and yields.
How much more juice is there in the equity upside if it is a Trump and a red sweep? Just listening to some of the voices in Riyadh, Larry Fink warns that we have greater embedded inflation in the world than we've ever seen. Maybe that's also, a protagonist for these higher bond yields.
I'd say one of the symptoms of all this uncertainty has been the reaction to stocks to earnings. They've been swinging like crazy. Tesla, Netflix, Lockheed Martin, all of them are rising or falling more than 10%. It just shows that this is a market on edge.
Well, Alphabet is in our sight line today. Let's take the proposition of how to prepare for the next 10 days to Seema Shah. She's the Chief Global Strategist of Principal Asset Management. Seema, good to have you with us. We're talking about prepare for Trump, hedge for Harris, but it's a starting point that matters probably the most. You had a 15-month rally after Trump came to victory in 2016, but the market was trading at 1.8 times then. Now we're trading at 3. How much more mileage is there if you have a Trump victory and or a red sweep?
Thanks, Manus, for having me on this morning. It's a really interesting question because I think there's a lot, of course, there's a number of similarities to 2016. One of the key ones, though, is that a Trump victory at that time was a complete surprise. So, of course, after the result, you did have a very significant market reaction. In this situation, markets are already betting on a Trump victory, so it wouldn't be as much of a surprise, I guess, and you wouldn't expect to see such a violent market reaction. But to your point about where the market is today, as you said, we have seen a a tremendous rally in equity markets over the past couple of quarters, couple of years, in fact. So there is actually very limited room for the market to continue at this kind of pace. Valuations are very extended. So although I think it's a very positive economic outlook, I think investors are starting to look at the number of stocks and say, well, look, do we want to be going into a market which is really expensive? Can we honestly expect to see very, very significant gains from here? Or are we looking at a little bit more measured pace as we continue over the coming months?
Seema, you know very well, though, that if you tried to invest just based on valuations, you would have missed a large chunk of rallies over the past few years. What makes this time different?
So you're absolutely right. And I think that is key. If anyone had just looked at valuations and then they would have stayed away from the Max 7, they would have stayed away from US equities. And we know that that would have been a horrible decision to make. I'm not saying that this is very completely different in that regard, because, of course, if you were once again to look at valuations, you would be looking at other markets around the world and completely ignoring the US. I think that what this is telling us, though, is that from here onwards, it's going to take a little bit more of a positive surprise to get that catalyst to push the market significantly further forward. And at this stage, the market is already pricing in pretty good news. It's pricing in a soft landing. It's pricing in some Fed cuts. And it's pricing in a general global stimulus wave. So from here on, it's difficult to see what's going to surprise to the upside that is going to give that very significant push high, that you get that meaningful gains like we've seen over the last 15 months.
Listening to Larry Fink in Riyadh in the past 20 minutes, we have greater embedded inflation in the world than we've ever seen. And I think we're going to see interest rates as not as low as people thought. That embedded inflation risk is something that we don't spend a huge amount of time talking about. We talk about a no landing, but this is a concept which can provoke a very different response from the Fed next year.
So I kind of agree. I mean, in a way, yes, inflation, as we look out, not just over the next year, but if you're looking out over the next 5-10 years, it certainly seems like inflation is going to be higher over the next 10 years than it was over the previous 10 years. And there's a number of structural reasons that Larry Fink has obviously laid out. In terms of how the Fed responds to this, I think the one key takeaway for us is that you're very, very unlikely to see rates coming back down to zero. This is a higher for longer, but it doesn't necessarily stop the Fed from moving forward with rate cuts, at least taking them towards neutral.
Yeah.
So I think that, it's a concern in some ways, but I think it can be exaggerated because we're not expecting a spike in inflation. For that, you need to have another supply chain emergency, or at least some kind of demand shock as well. And I don't think that's on the cards for now.
Seema, you're talking about the medium term. I want to know about the near term. When the Fed has a decision to make 2 days after the election, when we might not know who will be the future president, nearly a week after jobs data this Friday, when the lowest estimate is a negative print by Bloomberg of 10,000, Bloomberg Economics, and a medium of 110,000, skewed by strikes and weather. What happens on November 7th, and how should we react to it?
So this is a pretty difficult time for the Fed, and not even just the next couple of months, but actually even if we look out over the months ahead, the data is somewhat compromised. You mentioned the strikes and the weather. There's also a declining response rate in a lot of the labor market data, and then throw in the election on top of that. But I think for the Fed, there is a risk that they're flying blind almost, especially because they are data dependent. But certainly from our perspective, if you're looking out over the next 6 months or so, and we can say that, look, household balance sheets look pretty strong, corporate balance sheets look pretty strong. So is there a risk that this is going to turn into something really negative? Probably not, but we do know that rates are pretty restrictive, and the Fed needs to keep going. The other thing that we are taking away from this is that if we look back over the last couple of months, the one thing that the Fed did repeatedly say is that they don't want to have a stop-go cycle where they start rate cuts and then they stop and then maybe even hike again. That is something that they're really looking to avoid. So that does give us some reassurance, and at least in the November and December meetings, we should expect to see 25 basis point rate cuts. From January, you do start to introduce a little bit more uncertainty because we need to see how the economy is panning out. But I do think they're going to look through the noise, or at least I hope that they would look through that noise.
Yeah, they're going to have to try and look through this sort of potentially dirty number with various hurricane and strike issues in it. We're counting down to some of the biggest Mag 5 out of the Mag 7 this week. Alphabet is on the slate today. Yesterday's conversation was around CapEx, which would embolden or add to the momentum of the Mag 7. How important is the CapEx number? What are you going to be looking for in Alphabet and the other hyperscalers this week?
I think think it's pretty straightforward for a lot of these companies. We just want to see, are they delivering on these really lofty expectations? I mean, one thing that has been interesting to us, if you're looking back over the last couple of months or so, is that whereas once upon a time the Mag 7 would do well if the market sentiment is obviously very strong, but it would also do well if the market sentiment was quite weak, because they'd be looked at as a bit of a defensive play. I think since July you've seen a slight change in sentiment, or at least change in the way that they performed, where if market sentiment is weak, actually the Mag 7 do start to struggle. So, you know, they're leaders of the market, but they're also becoming a little bit more responsive to broader investor sentiment. It is important that they do meet those lofty expectations. If they don't, then I think it's going to give a lot of people cause for concern. And then, of course, hopefully, maybe see investors start to think about what other parts of the market can do well, where valuations are a little bit more attractive.
Seema, really great to get your thoughts. Thanks for your time this morning. Seema Shah of Principal Asset Management. Manus, let's get to some of the other top stories trending on the terminal this morning. Boeing raised around $21 billion in an expanded share sale. It was an effort to shore up its balance sheet and one of the largest ever sales by a public company. The infusion of funds clears one of the new CEO, Kelly Ortberg's most urgent tasks amid a period of financial turmoil and threats of credit downgrades.
Bankers at HSBC can expect to share in a 2024 bonus pool worth at least as much as last year's haul of $3.8 billion. Now, a higher pay pot contributed to a slight bump in the bank's operating expense in the first 3 quarters, along with inflation and its continued investment in technology.
Santander posted better than expected profit in the third quarter. The Madrid-based bank is among European firms potentially most affected by the global shift to lower interest rates. So executives are turning to job cuts and risk transfers to help control costs.
Coming up, Ford trims its profit forecast. We take a look under the hood.
And later in the show, it's a big week for big tech. Mads Peterson of Human Edge Investment Technology is staying overweight on the sector. He will join us around 5:30 a.m. New York time. Stay with us for that.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
Worth getting out of bed this morning.
The employment outlook, it's been bullish. People are good.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
How dependable is this data?
People want to know the outcome of the U.S. presidential election before they start maybe moving jobs. And guess what? The Fed has to make a big decision based on this data.
The October Jobs Report, Friday on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Cranny in New York. So Ford this morning, the stock is sputtering, to put it lightly, down 6% in the pre-market trade. Its full-year earnings will be at the low end of its forecast. The automaker also facing struggles from warranty costs, supply disruptions due to the recent hurricanes in the U.S. Joining us with more is Bloomberg's Craig Trudell. Craig, how much of this is just auto problems in full for the sector, woes, what have you, versus Ford-specific idiosyncratic issues?
Yeah, I mean, I think it's really sort of more of the latter. I think we entered this earnings season with a lot of pessimism for the industry. I think particularly over here in Europe, right? I think we're seeing sales really under pressure, concerns about compliance with tougher CO2 regulations in Europe. In the U.S., it's been a bit of a different story, and I think we can look back to GM earnings just last week where they really sort of blew numbers out of the water. Tesla also did quite well in the past quarter, and so this is a case of Ford really kind of diverging from the pack a little bit and falling behind because of familiar issues.
Well, they're not just falling behind either. They're going to lose about $5 billion on electric vehicles. Obviously, the CEO here should be looking over his shoulder and looking at Mary Barra and saying, right, she took remedial action perhaps a little bit earlier. What else can Ford do to close this gap in remedial action? I know they've got issues with warranties, but what's the other alpha they can do sooner?
Yeah, I think this is a case of needing to get Ford's house in order in terms of their electric vehicle business. To your point, I think they tried to maybe sort of cut corners a little bit and were caught off guard by the impending arrival of electric pickups that were going to potentially threaten the F-Series franchise, which that is absolutely the sort of crown jewel of the company. It still is in terms of a combustion vehicle, but we haven't necessarily seen electric pickups take off. I think Ford really tried to kind of steal a march on GM and rush a pickup to market that was largely based on the combustion truck platform. Didn't try to do a sort of dedicated electric vehicle. Their own, batteries, battery powertrain, the way GM pursued with Ultium. That hasn't worked out well in terms of for the consumer or for the company in terms of the sort of attractiveness of the product or the profitability of the vehicles. And so, I think that's a real issue that's going to take them some time to resolve. And then if you're Jim Farley, I think, he's holding up newly launched vehicles until the company can get its house in order from a warranty perspective. That continues to be a vexing issue for this company where, they're just underperforming relative to their peers, GM in particular, because of that issue.
Yeah, well, they're 300 basis points under in terms of margin as well. Craig, thank you very much. Craig Trudell in Berlin on the Ford story. Coming up in the show, go out, get yourself into the office. That's the message at Starbucks. A major push. I'll get there. A major push for people. It's the triptych of P's to return to the office. Context matters on Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Manish Krani alongside Danny Berger here in New York. The leaders in finance and tech are gathering in Riyadh for the Future Investment Initiative. Bloomberg caught up exclusively with the Goldman Sachs CEO David Solomon on the state of the U.S. economy. Let's take a listen.
The U.S. economy is actually doing quite well. It's been very, very resilient. I'm a little bit more concerned about European growth and also the economic situation in China. But overall, the engine of the U.S. has been quite powerful, and our business, while global, is quite correlated to U.S. growth. I can give you a list of things to worry about, but generally, I can tell you also a list of things that I'm quite optimistic about.
Yeah.
The progress around technology and AI and the opportunities to increase productivity are real. Progress that we're seeing around healthcare and medical technology are extraordinary in the impact that they'll have. So there are a lot of reasons to be optimistic about the growth and trajectory of economies around the world.
Yeah.
But there's also fragility and things can go wrong.
Well, I was going to pick up on that because it's been really difficult to sort of track the narrative around the U.S. economy the last few months because we've gone from hard landing to soft landing. Now people are talking about no landing. I'm not going to ask you for a descriptor of the U.S. economy, but what I will ask you is where are some areas of concern that you're seeing right now?
Well, the base case in the U.S. is certainly at this point for a soft landing. That doesn't mean that at some point there can't be, some sort of a slowdown in economic growth. But what I would say is the U.S. economy is proving to be incredibly resilient. We do have an election in the U.S., and there'll be policy decisions that come out of that election. And so, certainly those will have an impact on the trajectory in 2025 and 2026. With respect to, European growth is more sluggish at the moment. And I'm concerned about the same things that many people I know are talking to you about at this event. Geopolitics, U.S.-China relationship, the situation in Ukraine, the situation we just touched on in the Middle East. Also concerned, broadly about inflation in the world, concerned about energy policy, which is obviously a significant issue. I'm concerned about immigration and migration, which is an issue in different parts of the world. So these are all issues that require leadership and policy direction. And I'm hopeful as we get past the election in the U.S. and we continue to move forward, we'll see a clear direction of travel on some of these significant policy issues. I think there's an awful lot of attention on short-term rates. I'd actually be focused over time on longer-term rates. And, I continue to be concerned about the level of spending and deficits in the United States. I don't think that's a short-term, crisis factor, but unless we have policy change and get our spending and our debt under control, ultimately that's going to have a bigger impact on long-term rates than I think people are anticipating today. With respect to the short end of the curve, I think it's going to be very data dependent, and that data will be driven in part by what kind of policy we see coming out of the election.
Yeah.
And so I think it's important to watch carefully. It seems like the Fed has been relatively transparent that we'll get another interest rate cut before the end of the year, but after that, I think it will be very data dependent on what kind of policy implementation, what happens to growth, are the inflation numbers actually improving further? You know, those are all things I think the Fed will be watching carefully.
Can I just circle back to your first point vis-a-vis spending, though? 10-year Treasury is trading around 4.3%. Do you think that is adequately pricing in the fiscal premium in the years to come in the U.S.?
The market's the market, and so it is absolutely pricing in the premium that the market perceives today. What I would just say, if you look at the trajectory of our spending and our debt and the interest burden that we have, I think over time, and over time is through the rest of the decade, et cetera, we'll have to bring new buyers into U.S. Treasuries, and that will potentially have a risk of putting pressure on longer rates, unless we want to finance the whole Treasury stack at the front end of the curve, which would be a very, very significant policy shift.
Bloomberg's Germana Bersace speaking with Goldman Sachs CEO David Solomon. Okay, let's look at some front page news this morning, a look at what's making headlines around the world. First up, the New York Times leads with this. Puerto Rico's GOP chairman is demanding an apology from Trump after comics remarks on Sunday at Trump's Madison Square Garden rally. Tony Hinchcliffe, in an opening speech, referred to Puerto Rico as a floating island of garbage. The chairman said that he would withdraw his support from Trump unless he apologized for the racist remarks.
Next up, the Wall Street Journal leads with Jeff Bezos defending the Washington Post decision not to back a presidential candidate. It's an op-ed, and he said endorsements create a perception of bias. He admitted that the misstep of the decision's timing says he wishes they had made the change earlier. A lot of billionaires changing their direction.
Yeah, a news cycle election really dominated by billionaires, Bezos, Elon Musk. Meanwhile, Bloomberg has this. Starbucks is threatening to fire staff if they don't return to the office. Basically, the policy says come into the office 3 days a week with exemptions available upon request, but they will implement a standardized process to hold workers accountable if they don't abide by the return to office policy. Manis, the obvious irony with this is that Brian Nichols, the CEO, when they appointed him, they let him live in California and just travel on the jet to Seattle. And at the time, Bloomberg reporting was staffers did not care where he lived as long as they didn't crack down on their own work-from-home policies.
Yeah, but this is one of those double twisters, which is he can work his schedule, but then look at what's happening at Amazon 5 days a week. You've got Dell, remote working, you know, again, it is really very much under question. But this is beautiful, isn't it? The CEO, private jet, can come and go anytime you want. I mean, why don't they just say he has a house, move him to Seattle, and, you know, he can come and go as he wants to California? No, it's actually allow him some form of flexible working.
I always look at these things and say, it's just a way to cut costs. It's just a way to give an excuse to basically say, if you don't want to come into the office, we're going to let you go, and kind of an easy way to let go of workers.
Either way, it's whether you believe Starbucks is still your destination of choice to have your coffee when they say, welcome in.
No comment.
In terms of how we should deal with the challenges that are, facing the world and also internally, I think it's just an opportunity also, an angle. And you could see that in a lot of activities that are picking up in this region, simply because it's a region that is actually a bright spot amongst very few in the world today. And people always talk about the flavor of the month. Actually, I don't want to sound too, large-headed, but actually we will be the flavor of decades. We are determined, we have long-term plans, and we are very clear and committed on our commitment to the investment community at large. I'm not talking about one individual country, but at large in the GCC, that we mean business, that we are willing to take every step possible to make it easier for investors to do business in the region, that we are willing to do a lot of structural changes, including actually making it very predictable, very consistent policies.
DOJ or other authorities
could face bigger challenges. Britain's next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
From our global headquarters in New York. Welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Treasury yields take a breather after weak auction sales and the Trump trade pushed them higher. Alphabet kicks off this week's big tech earnings, $20 trillion in market cap, set to report in just 3 days. And leaders in finance gather in Riyadh. We'll bring you part of our exclusive conversation with David Solomon of Goldman Sachs. Danny, good morning.
Well, it is the week that Barclays strategists are calling a week of catalyst galore. 2-year yields 10 and 30 still under pressure this morning. 4.2% basis points yesterday move for 10-year yields. A weak auction and betting markets increasingly implying the odds for Republican sweep despite NYMEX crude falling 6% yesterday. It's a little bit higher today. S&P 500 basically flat, trying to put in another day of gains after yesterday. Tech stocks, those are under focus this morning. Those are outperforming. We have Alphabet earnings tonight, Microsoft, Meta tomorrow, Apple and Amazon on Thursday. And then we have to wait a month for NVIDIA, Manus.
You got them all in there. Bang,
did.
bang, bang, bang.
Were you impressed?
I was very, very impressed. It's going to come. It's going to come down to. I fell over my P's in alliteration. So well done to you for your Amazons and your Alphabets. Look, it's a starting point, isn't it, about where we are? It seems as if this market is preparing for Trump, potentially hedging Harris, but it's, where do you start? And we just had a conversation with Seema Shah, and she said, look, the ability to really leg higher from here is a little bit more limited because so much of it is in the bond market and the equity market, the presumption, the betting presumption of a Trump victory next week.
I just think expectations are so weird for this earnings season because we have been so focused on the election.
Yeah.
You get these really strange swings in equity markets. Barclays also mentions that big gain in Tesla really reset things for this earnings season, that people looked at that and said, wow, you can have blowout earnings. We've kind of been ignoring this and maybe we aren't prepared for it. It is a big week for tech. Should I do the calendar again?
Go with the calendar.
Okay. Alphabet kicks things
Alliteration.
off. It's Alphabet kicking things off today. Then it'll be Microsoft and Meta on Wednesday, Amazon and Apple on Thursday. All those alliterations just for Manus Cranny. Mads Peterson of Human Edge Investment Technology is staying optimistic about the earnings season and for tech. He writes, we are long tech, and the biggest mistake to make this year and this decade was not to be invested. Joining us is the man who is fully invested. It is Mads. Mads, thanks for joining us this morning. So what is at stake with these tech earnings?
Well, what's at stake with the tech earnings is everything. The market, the recovery, but it's also the drive of the technology as the positive change in the world we're living in at the moment, because these companies are making money, they're reinvesting them, but they're also converting revenue with low profits into revenue with high profits. So 100 billion made in technology returns much more profit to shareholders than in any of the other sectors. So it's more or less everything we know about capitalism which is at stake, not in this earnings season, but with this transition.
I love what I love what you say, Mads. Good morning to you. Underestimating U.S. capitalism can be fatal, but the worst mistake now is not to have a plan to handle the coming corrections. Now, this is slightly contrarian. What corrections do you think we're going to have, and what triggers them? And that's much more important to me.
So what triggers them is uncertainty and the price of capital, typically. When people realize that they thought they knew how the world works, then suddenly you see in the price of capital that you didn't. And that means what I mean in normal language is if credit spreads, they widen, or if somebody has misplaced huge bets. And that's why the largest economic bets at the moment are in the tech sector, so they need to convert this into earnings. In terms of what's at stake is equity markets have moved up more than 100%. If we look at S&P 500 the last 5 years, so obviously sometimes within the next 24 months, we'll get a 20% correction. If things stop there, it's okay not to have a new strategy. We think that normally booms like the ones we've had lead to a bust, and people need to have a strategy how they hold on to their investments when markets go down 30 or 40%, or how they reduce their exposure. And with people having locked up a lot in private equity, they need to be more nimble and more active with their liquid portfolios.
Mads, you're talking about what happens at that event, how you handle risk, how you stick to your strategy, but do you do anything to prepare? Is there anything that is a useful hedge in a market where bonds, usually the state asset class, have swung back and forth with both positioning and prices throughout this year?
There is exactly these bonds because they just moved up 40 basis points and now they're actually a good hedge again. So it's just a question of not over-putting too much money into the bonds because the central banks have made these bonds very volatile. So the first thing you need to do is you need to map out your plan so you know what you're going to do if things go wrong. For example, we have strategies where we hold 99 or 100% equities. And I have written down a long time ago, what is it we're going to hold when we only hold 20% equities in these strategies. You need to have a plan. If you write it down, it's easier to change it. Secondly, government bonds in the US will be an excellent hedge if we get a recession. They will be a better hedge now than they were a month ago. The art of the game is to not go into them too early.
What is it that provokes you to prepare for a 20% drawdown in liquid assets in the next 24 months? That's really what I want to get the rub to, because the consensus in the market is no landing, soft landing. I mean, you take your choice of what phrase you want to use, but solid growth, 3% growth in GDP, solid growth. If there's a Trump victory, you get more fiscal expenditure. So what is the grenade that triggers a 20% drawdown?
Well, the whole point is that you're absolutely right. The growth story is even better. It's 6% nominal growth. But we didn't see it last time it happened. We didn't see it the previous time. If we talk about the tech collapse, and if we talk about the great financial crisis, and obviously the pandemic, well, it came out of Wuhan, but it also came out of the blue. So, it's not a question of knowing where it comes from. It's a question for being ready for the unknown. If you think you know where it comes from and you're super cool, then you're the worst possible risk manager, or if you drive a car, the worst possible driver in the world. At the time when you're not alert, that's when you can really hurt yourself and your passengers or your co-investors. So be ready for what you don't know, but look for the signs. Look for example, we have a lot of problems in CMBSs at the moment. Will these stay contained? Will credit spreads stay low and support growth, or will they go worse? Will the Chinese be able to implement a plan in the coming months, or will they another time, like they did the last 2 years, talk a lot, bet all their money on the market, and not be ready to actually support the consumption side of the economy? Those are the three main things to look out.
Mads, just that China comment really emphasizes that the U.S. is standing alone in the type of strength that it has. It's the American exceptionalism. Is there a point where soft growth in the rest of the world, be it China, be it Europe, be it developed markets, developing markets, impacts the U.S. and impacts the attractiveness of multinational companies?
Yes, there is a time, but until now, as long as it's only on the margin, it's actually a positive because it creates a deflationary input to a U.S. which has had a very inflationary policy. First, there was the printing of the money and the low interest rates, and now there's the very strong fiscal policy. imagine if China had been growing anywhere close to what they say they have been growing, or even to their historical growth. If Germany had grown at 1.5% and China had grown at 7%, the US would not be able to grow at 2.5 to 3.5 without huge continued inflation. So until now, there's an impact. It has been positive in the sense that it has kept inflation down. And the US economy is still primarily a closed economy. There comes a time when the US will pay a bill in terms of political consequences, and that's the time at the moment. So for the time being, it has been a positive consequence when the rest of the world, if the rest of the world reaccelerates. And remember, we have a 120 years history where the US have actually consistently done better, so it's not a short time period. But if the rest of the world rebounds, the US will have to slow down.
Okay, Mads, thank you very much. And we finish where we started. Underestimating US capitalism can be fatal, given the context you've just laid out. Mads Pedersen of Human Edge Investment Technology. Coming up in the show, Danny and I'll talk about Apple. It's leaning less on China and getting more iPhones from India. Context matters on Bloomberg.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Donald Trump spends full time trying to have Americans point their finger at each other, fans the fuel of hate and division, and that's why people are exhausted with him.
The newest line from Kamala and her campaign is that everyone who isn't voting for her is a Nazi. I'm not a Nazi. I'm the opposite of a Nazi.
That was Vice President Harris and former President Trump in their final stretch of campaigning with just 1 week until the election. Mike Shepard is tracking the trail of both candidates. Mike, look, when you look at this, this is going to be a real frenzy, a mad dash to the last line. We've got a freedom rally. We've got her closing arguments this evening in Washington. I was brought to look at Henrietta Treyes from Vita yesterday. She said this is all about the fight for the suburbs, and that's where she should focus. This is where Hillary Clinton didn't focus in 2016. So how targeted will Harris's campaign be in these last days of the campaign?
Well, Harris will be aiming tonight's message at exactly that demographic, the people who would balk at a return of Donald Trump to the White House, but might still be reluctant to vote for Kamala Harris because they either say they don't know her or have other misgivings about perhaps voting for a Democrat. The backdrop of this event is purposeful. She's speaking from the National Mall on the Ellipse. It happens to be the same location where Donald Trump gave that infamous speech right before his supporters stormed the U.S. Capitol on January 6, 2021. So she will be trying to be drawing a contrast between herself and that moment, and then more recently, Donald Trump's own closing argument given at Madison Square Garden in New York on Sunday, where we saw a number of the warm-up speakers invoking racist and misogynistic language, the very kind of divisive conversation that Kamala Harris pointed to in the remarks ahead of our conversation now.
Shep, it's been remarkable with that MSG appearance, the kind of nothing matters crowd all of a sudden woke up and said, maybe this is something that will break through. So what does Trump do from here? What is his plan? Where is he speaking? Does he need to do some course correction after Sunday?
Well, we saw in his remarks last night that he already was on the defensive. He even had to say, I am not a Nazi, I am the opposite of a Nazi. And his supporters also have had to distance themselves from some of the worst of the remarks on Sunday afternoon and evening. Yet they're going to have some work to do in reaching back out to some of the groups that they have spent months trying to cultivate. And that includes black voters and also Latino voters who now might be turned off a little bit. And you might think that a handful of votes here or there, well, what's the difference? In an election as close as this one, every vote really counts and really matters, especially in these swing states, and Trump will be in one in Pennsylvania today. This is one of the key battlegrounds, and they can't really afford to lose any support anywhere.
No, well, he was evangelizing, excuse the pun, in terms of early voting. He was in front of a faith crowd yesterday in Georgia, and it really was about Republicans getting out and voting early. You talk about Pennsylvania. A Philadelphia district attorney is suing Elon Musk. This is over his $1 million, you know, the draw, $1 million if you sign up on the petition. How consequential is that? Because I can hear the drum roll from the other side, which is, you know, it emboldens the Trump base by taking this action now. What are the consequences of this this suit?
Well, for the short term, it's not going to stop Elon Musk. His super PAC and Musk are indicating that they have no intention of stopping. But the whole notion of this $1 million lottery to try to get registered voters out there and encourage their participation in the election had drawn scrutiny not only from the Philadelphia district attorney who called it an unlawful lottery, but also from the U.S. Department of Justice, which had expressed concern in a letter to Musk's super PAC that it might be in violation of U.S. election laws. So we'll have to see how that unfolds on a national level, but we probably won't have a resolution until after the U.S. election next week.
Shep, it is remarkable how much this election cycle has been dominated by news of billionaires. Jeff Bezos, the recent one, after spiking what was a drafted endorsement of Harris, he wrote an op-ed yesterday trying to defend that, basically saying they do nothing to tip the scales in an election. It just creates a perception of bias. The number I think NPR was reporting was 20,000 subscriptions canceled from the Washington Post. What does this tell us about where we are right now?
Well, this is yet another twist, just like the lottery we were talking about, in a historically chaotic and unpredictable election. And in this case, nobody had it on their bingo card that the Washington Post would not endorse a candidate. They have been doing so ever since 1976. And some of the reasons that Jeff Bezos gave in justifying the decision was that he was worried about the perception of bias, saying that an endorsement would create the perception of bias. Yet across the Post newsroom, there have to be concerns that, hey, wait a minute, we have been reporting hard on the former president and his plans should he return to office. And if you are not going to endorse, you are besmirching our work. And I should note that I worked for more than 20 years in that newsroom and have many current and former colleagues there, and understand some of the fear and loathing that they're going through right now in this moment.
Yep, a newsroom you're very familiar with. Shep, thank you so much. That's Bloomberg's Mike Shepard. Okay, some corporates we're keeping our eye on this morning. Apple is increasing its reliance on India, shipping $6 billion of iPhones from the nation and reducing its dependence on China. Joining us with more is Bloomberg's Sunkulp Fertial. Sunkulp, this is a story that's been ongoing for some time. Just how much further away has Apple moved from China at this point?
We reported last year, India's fiscal year begins in April and ends in March. We reported last year that Apple was making around $14 billion of iPhones in India. That's the total production we're talking about. So Apple has very steadily but very quietly increased their reliance in India. And they now make just under 10% of their global output from India. So this is a huge step for them. And, you know, we're just talking about the elections. If Trump comes to power, India would be a great base for Apple to rely on.
Well, in terms of product and delivery, they may well be moving away from China, but they're also starting to roll out their AI product on a number of devices. What do we get? How's it going to change my life?
So the AI rollout is yet to come out in India, but I mean, we all know that they're using OpenAI. For now, I don't think generative AI changes your life drastically. It's more of a very powerful search engine. You can write poetry on it or ask it to tell you the latest, but I mean, I don't think it's going to transform your life as of now, to be honest.
Okay, well, I don't think I'm going to rely on it too much for questions for CEOs. But you never know. You can always run it through and see what they come up with. Sunkulp, thank you so much. Sunkulp Fertial there on the Apple story. Big day for earnings. Tech earnings are in focus this afternoon. We're also going to get a slew of other reports before the market opens. Pfizer is one of those, with investors looking for improved profitability as the company cut costs and reorganize themselves. Sam Fazeli is with us for Bloomberg Intelligence. Sam, they've got an activist investor on board, which is Starboard. So the pressure is on them really to deliver. What do you think the activist investor and the market are looking for in this set of results?
Yeah, so good morning, Manus. I think we've seen a presentation from the activist investor, which is a long-standing activist investor that has, as you know, and everybody knows, and been following the story, taken an interest in Pfizer. If you look at the presentation, I can't really walk away from it and say, oh, yeah, that's a good point. You know, it's all about the company should do better. Management should do better. Now, of course, you know, you can tell by the share price that the company needs to do better. So there are no real solutions in there. What the market's looking for is how is Pfizer going to grow as it's fighting a declining COVID business, and also it's got some patent expiries coming up. So we need to see the pipeline highlighted more, and maybe the market's looking for more M&A. But they've done M&A. Some have worked, some have not worked. Some look like pretty good deals, like not in terms of value, but Seagen necessarily. Seagen, the one that they recently did, does bring a pretty good pipeline. So what we're looking for actually for this 3Q number is how have they done with COVID, the two products they have, the vaccine and Paxlovid, and what does that mean for the full year?
What about leadership? What about executives at Pfizer? Are they under threat? It seems to be an odd back and forth with the activists as to whether they're attempting to push them out or if they're behind them.
Well, they didn't really specify anything as drastic as that, Danny. You know, but even if you change the CEO, let's say that's one of their options, it doesn't really make an immediate difference to the share price. I don't think that the world believes that Albert Bourla is single-handed responsible for the share price moves in Pfizer. You know, there are many other issues that impact a pharma company in the R&D world. A lot of serendipity. They have had a streak of setbacks, but I think, you know, you can't just by changing the CEO, you can't guarantee that you're going to change that.
Okay. Sam, thank you so much. Those earnings coming before the bell, shares higher this morning. Sam Fazeli of Bloomberg Intelligence. Coming up, we will set you up for your trading day.
everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
I think there's an awful lot of attention on short-term rates. I'd actually be focused over time on longer-term rates. And, I continue to be concerned about the level of spending and deficits in the United States. I don't think that's a short-term, crisis factor. But unless we have policy change and get our spending and our debt under control, ultimately that's going to have a bigger impact on long-term rates than I think people are anticipating today.
Part of Bloomberg's exclusive interview there with Goldman Sachs CEO David Solomon at the Future Investment Initiative Conference in Riyadh. Check out more of that on the terminal and Bloomberg.com. Okay, let's take a look at what's ahead today. Set you up for your trading day on this Tuesday. Pfizer and PayPal both will report earnings before the bell. Plus, economic data. We'll get JOLTS numbers. That comes at 10 a.m. More earnings then after the market close. Alphabet, AMD, and Reddit all report matters.
Yeah, log into your Reddit account, see what's moving. One thing that is moving is Bitcoin. Have a look at this. We're trading at 71,000, above 71,000 for the first time since June. The money's flooding in. If you want the very personification of a punty Trump trade, this maybe is it. $3.6 billion net inflows in October. And the options market, ring a bell. They're looking for $80,000 by the end of November.
I think one of the keys for this trade and why it's gotten another leg higher after the rally is because the betting markets have started to change, not on Trump, but on a red sweep. Something like a 48% chance on some of the poly markets showing that. And that's when you could really get some of these policies come in. So if you're looking for a reason to trade, that is what this market is keyed in on.
It's amazing how we move from, sort of decrying poly markets 10 days ago by the whales moving them, and then it actually comes back and reinvigorates everything. Anyway, they'll take you through the rest of it on surveillance. That's it from us.
If you go back to PCs, now I know a lot of people have, especially if you're using the Linux analogy, people don't necessarily consider Windows to be maximally open, but compared to the Apple approach of kind of coupling your operating system with the device, the Windows approach was a more open ecosystem, and it won. And part of my hope for the next generation of platforms, which includes both AI and the work that we're doing in augmented and virtual reality, is to, Meta wants to be on the side of building the open ecosystems. And it's not just that we want to build something that's an alternative to the closed ecosystem. I want to restore the industry to the state where the open ecosystem is actually the one that is leading. So I think it's possible. I think I think we're making good steps on that in both AI and AR and VR. But that's something that I just personally and philosophically care about, given the kind of limits on creativity that I've felt have sort of been applied to our industry by the closed model of mobile development over the last 10, 15 years.
I want to go deeper on that point that you just mentioned of restoring the industry to the state where the open ecosystem is the one that's leading. And so obviously right now we have Llama 3.1 405B just came out. It's competitive, and it even beats some of the best closed models across key benchmarks, which is insane in its own right. But in your letter, you also mentioned that Llama 4 is expected to become the most advanced model in the industry. Are there any specific things about Llama 4 that you're really excited about?
Oh man, I mean, it's we're just doing 3.1 for Llama now. I think it might be a little early to talk about Llama 4, but we've got the compute cluster set up. We've got a bunch of the data set up. We kind of have a sense of what the architecture is going to be, and have run a bunch of research experiments to kind of max that out. So I do think that Llama 4 is going to be another big leap on top of Llama 3. I think we have a bunch more progress that we can make. I mean, this is the first dot release for Llama. There's more that I'd like to do, including launching the multimodal models, which we kind of had an unfortunate setback on that. But I think we're going to be launching them probably everywhere outside of the EU, hopefully over the next few months. But yeah, probably a little early to talk about Llama 4, but it is going to be awesome. And it has been one of the interesting things in running the company is basically planning out the compute clusters and data trajectories for not just Llama 4, but the next probably 4 or 5 versions of Llama, because I mean these are long lead time investments to build.
Bullish on Trump winning than the predictive markets are.
The most bullish for the dollars of red wave.
Yields, I think, are moving higher based on the election.
To have a closely contested election would be very unsettling to the bond market.
I think inflation is due to notch higher, or at least stay stubbornly stuck where it is, no matter who wins.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Election day, a week today. From New York City this morning, good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday with equity futures on the bounce from yesterday. We're just about unchanged on the S&P 500. On the NASDAQ 100, we had a little bit more weight to this. We're up 0.1%. Get to the bond market and sit at the front end of the curve. The 2-year yield is higher for 7 consecutive days. If we close higher for a 7th consecutive day, that is the longest run since May of 2023. On the calendar today, some important economic data. We kick things off with JOLTS, job openings a little bit later on this morning. Then after the closing bell, Alphabet reporting. The first of the Mag 7 reporting so far this week. Lisa, as for the economic data for JOLTS, I've heard this a few times already. This might be the last clean data point going into the Fed's meeting a week tomorrow.
The translation being it might take on outsized importance in terms of a market response because it is maybe a better guide than the headline number may be on Friday. I will just say it is incredibly notable that we've seen this rise in both 2-year and 10-year yields, even though oil prices have been declining. This has come with other factors, whether it's the Trump trade, whether it's something else that's better economic data, unclear, but it is shocking to see that 10-year yields are up 68 basis points since the recent trough 2 days before the September Fed meeting.
I'm with you. Crude had its worst day of the year so far, down 6% yesterday, and yields crept higher by 4 basis points. I've heard it from you, I've heard it from Jim Bianco, Jim Reed, Bob Elliott. We're all looking at the same thing here. Why? And I'm hearing the T word quite a lot. This is from RBC. The market's syncing up with Trump again. Citi, Trump trades have rallied. Morgan Stanley, add a GOP sweep to the list of goodies already discounted. Your thoughts on this in this market?
Well, so look, we're a week out, and already you have more than 50 million Americans going out and voting, according to the University of Florida's election lab. Why people maybe are thinking more about a Republican sweep, because it is easier to get a Republican sweep than a Democratic sweep because of the Senate map. And we're going to talk to Jessica Taylor of the Cook Political Report, and there's 3 key races to watch. 1, Nebraska. That is certainly becoming a little bit of a wild card. Wisconsin and Pennsylvania. These 2 Senate races were lean Democrat, and the Cook Political Report says they are now toss-ups. And we look at 538, 2 out of the 3 blue wall states, Wisconsin and Pennsylvania, are even, dead heat for the presidential race. New York Times this morning reporting Kamala Harris, that camp thinks they can hold the blue wall, while the Trump camp thinks they can easily pick off at least one of those states. It's really going to come down to these 3 key states, and everyone has their eyes on Pennsylvania.
Mike Wilson of Morgan Stanley has alluded to something similar, that maybe this playbook this time around won't be the same as the one back in 2016, because so much of a Trump win has already been discounted. And if you get a Harris win, then we're vulnerable to whipping the other way.
Yeah, he's talking about directionally some of the sector leadership might actually be somewhat in line with the Trump trade of 2016. But there is a completely different scenario, whether it's coming to the materials world, whether it's coming to how much has already been priced in, and whether it comes to the deficit that already is significantly higher at a time where inflation, remember, inflation was welcome back in 2016. An inflationary shock was thought of as a great thing to get us out of this disinflationary spiral. Well, what a difference 8 years makes.
I remember 8 years ago, we wanted more active fiscal policy. Do you remember that?
Thank you.
Okay. Backed away from that in the last 8 years, that's for sure, after the last 4 in particular. Equity futures on the S&P 500, just about positive at the moment. In the bond market, yields have been climbing once again this morning by a basis point or two, very briefly, taking out 430 on a 10-year, 429.83. Coming up this hour, we'll catch up with Michael Schall of Ion Asset Management as the U.S. economy continues to beat expectations. John Lieber of Eurasia Group on Donald Trump's rising momentum, and Jay Bryson of Wells Fargo expecting a cooler labour market. We begin this hour with equity futures little changed and bond yields pushing through 3-month highs, going into a busy slate of economic data and Mag 7 earnings through the week. JOLTS job openings and consumer confidence due today, ahead of Alphabet earnings after the closing bell. Michael Schall of Ion Asset Management joins us now for more. Michael, good morning to you.
Good morning.
What do you make of the argument that we've already discounted a Trump presidency?
I think you have, to a fair degree. It's a big difference to 2016, where pre-election, every time Trump was ahead of the polls, the markets went down. So, you know, we are set up for something quite different. You know, at the same time, the market didn't really think it would have a Trump presidency and had no idea what it would actually mean. You know, at the same time, I don't get the feeling that the election has been that important for the overall flows into the market. I think it's been very important for some very specific flows. I'm sure at the margins, yields are higher because of Trump trades, but I also think yields are higher because people went much too far in the other direction going into that September Fed meeting. And I think most of what we've seen in the backup in yields is the realization that the US economy is okay and the Fed is not going to be cutting rates by 150 to 200 basis points over the next 12 months.
So how big do you think the stakes are coming out of next week? Do you think it has the real potential to redefine the macro environment?
I think it has the potential to redefine the country. You know, it feels like a very, very big election from a social perspective. I think you'll have a different America one way or the other. As far as the macro environment's concerned, I think there are limited tools available, even in the case of a sweep. I don't think it's easy to extend the budget deficit beyond where we are already. You know, this already seems to be a reckless fiscal path that the country's on. And, you know, my suspicion is whoever wins, you know, I think they better hope for divided government. Otherwise, they're going to be disappointing a hell of a lot of their base going forwards.
But even if it's a sweep, and now the market's pricing in this red sweep, a lot of that has to do with the Senate. We are talking about, the former president's talking about using the Alien and Sedition Act of 1798. He's talking about mass tariffs. All of this he can do with executive orders. Wouldn't that have massive implications on the macroeconomic policy?
Yes, I do think tariff policy is the clearest big difference where I think you could see, you know, Trump and Harris looking completely different. Again, I think there'll be limits to what can actually be done. There'll be practical limits. I think you'll see market pushback, corporate pushback. But I do think under Trump, you know, his tariff policy, he feels, was relatively successful. I think it's notable that the Democrats did not unwind pretty much everything that he did. So, you know, I think, I'm not saying, there's obviously big differences between the two of them. And yet, I think many of the big issues facing this country are going to be facing us no matter who takes charge next week.
True, especially when it comes to tariffs, and the Biden administration kept those tariffs on. Today, we have more news overnight about outbound investments when it comes to China. They definitely have, there's a bipartisan approach, I guess, in how you want to view China. But you said that when it comes to tariffs, the market pushback will be strong against what Trump is trying to do. So say he does come in and does 10% tariff ring around the United States, 60% on Chinese imports. What is the market reaction?
Oh, I think it would be quite negative. You know, I think there would be, you know, I think there would be concerns. I think
but enough for him to come out and rewind.
I think he has. Look, he's an interesting character. You know, sometimes he promises big and delivers small, and sometimes he doesn't say anything and then delivers. He's the trouble with Trump, and this is what we all experienced, certainly between 2016 and the beginning of COVID, which was its own story, was trying to understand what he would actually do. Now, I saw the headline on Steve Schwartzman saying Trump understands more about what the job of president is. I think that's partially true, but he doesn't seem a terribly different person 8 years on.
I thought it was notable. You're talking about when we find out next week. I really have a question around that. Harley Bassman, who is the creator of the MOVE Index, which is the the implied volatility in bond yields, he talked about how there is the biggest potential volatility event from this election being baked into the bond market ever in his career, in data going back at least to 1988, saying that basically this market is pricing in an 18 basis point rate move in either direction on the days, not days immediately after the election. In this particular incident, are bonds the risk asset?
Well, I think you have to be careful. Volatility indexes show you what people are willing to pay for relatively short-term protection. So I do think the bond market is being used by people to protect portfolios. But you might have somebody who's got a really, really big pro-Trump trade on and a bond trade pushing against it, or somebody who's positioned in the opposite way. So I do think that volatility levels get pumped. Now, normally it's equity vol. This time it feels like the bond market has been used more by people wanting to put some kind of protection in their portfolio for how it performs between Tuesday of next week and Friday of next week. It's not quite the same as saying the MOVE Index is really, really high because everybody's afraid the Treasury market's going to fall apart. It matters, but it matters for a different reason.
When you came on a bit ago, you had just started in this new role, and we asked you how you're kind of thinking about weighting the different risks and what you were positioning for, and you didn't know. Are you more clear on kind of how to position in this uncertainty?
Look, I said when I was pushed, I hate being asked what I like or what I should do. I said precious metals were interesting 6 weeks ago. They've performed really well. I do think we are, we're in the beginning of this long story of fiscal discipline being reimposed on the US and other developed countries. So you hear more and more people talking about what are we going to do about the deficit, how are we going to deal with, how are we going to deal with the deficit. I think the very strong performance of gold and the beginnings of strong performance in silver are the signs of people moving into those markets partly to protect either corporate wealth or personal wealth. And I think that story survives no matter what happens next week. I have a hard time looking at our portfolio, understanding whether it wants Trump or Harris to come in. We have certain trades which I think have been the beneficiaries of Trump flows over the last month. And other parts of the portfolio probably would have moved the other way. To the extent we've got any exposure in China, I assume they'd rather see Harris came in. I think we'll pick up the pieces next week and decide which way to push it. But I think big picture, medium, longer term, certain trades like precious metals look interesting no matter who takes charge.
Gold up this morning at more than 33% year to date. Michael, it's good to see you. Thank you, sir.
Thank you.
Michael Shah there of Iron Asset Management. Equity futures just rolling over as well, slightly negative just for a heartbeat on the S&P 500 with an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Speaking of Trump trades, Bitcoin topped 71,000. That is its highest since June. It's being driven up by ETF inflows on the speculation of the U.S. election outcome. It is seen as a Trump trade to the Republican nominee's support for digital assets, with some predicting a rally beyond its March record high. Options traders, they are betting on Bitcoin reaching $80,000 by November, regardless of the election outcome. Apple's iPhone exports from India jumped by a third in the 6 months through September. People familiar with the matter tell us that the U.S. tech giants exported nearly $6 billion of India-made iPhones. That puts annual exports on track to surpass fiscal 2024. India is a crucial part of Apple's efforts to lessen its reliance on China, where risks have been growing alongside with Beijing's tensions between it and the U.S. Starbucks is threatening to fire staff if they don't return to the office 3 days a week. A memo seen by Bloomberg says that the coffee chain is implementing a standardized process from January to hold workers accountable. The move also comes less than 2 months after Brian Niccol took over as CEO. He told employees last month that they should work from wherever they need to in order to get the job done, but that he thought the place was usually the office. And that's your brief, John.
Hey, Danny, thank you. Every time I see a story like this, I'm shocked that they're not back in the office already.
Well, I love this also because Starbucks benefits from people being in the office and not making coffee at home. So it seems like a logical sort of home bias to try to get people back to the office.
You'd think. More from Danny in about 30 minutes' time. Equity futures just about unchanged on the S&P. Up next, election day, a week away.
Donald Trump spends full time trying to have Americans point their finger at each other.
The newest line from Kamala and her campaign is that everyone who isn't voting for her is a Nazi.
That conversation up next from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Check out the bond market. Yield still climbing. Your 10-year up by 2 basis points. We're through 430. Equity futures just about unchanged on the S&P. Under surveillance this morning, election day, a week away.
Donald Trump spends full time trying to have Americans point their finger at each other. Fans the fuel of hate and division. And that's why people are exhausted with him.
The newest line from Kamala and her campaign is that everyone who isn't voting for her is a Nazi. We're Nazis. I'm not a Nazi. I'm the opposite of a Nazi.
So here's the latest this morning. Donald Trump and Kamala Harris revving up their campaigns with only 1 week until Election Day. Donald Trump speaking at Mar-a-Lago, while Kamala Harris will deliver a closing argument speech at the site of the former president's January 6th rally in Washington, D.C. Bloomberg's Mike Shepard joins us now from the nation's capital. Mike, what do you make of the closing arguments?
This is her opportunity to speak to a national audience in much the same way that Donald Trump did on Sunday night in New York at Madison Square Garden. But in the vice president's case, she is going to be aiming that message specifically at key voting groups in the swing states. And we know which ones they are. And we know that she's going to be trying to speak specifically to women and to Republicans who might be sitting on the fence and wondering about whether they can cast their ballots for Donald Trump. And she's trying to highlight how the president has sowed divisiveness, including with remarks by some of the speakers who appeared at that rally at Madison Square Garden on Sunday. And Trump, for his part, is going to be trying to distance himself a little bit from that. And you heard in his remarks last night trying to back away from accusations that those remarks indicate that he is, in Democrats' views, something of a Nazi, somebody who has espoused fascist viewpoints, as some of his former advisors have said. So we're at a critical moment here for both. Trump giving his remarks today in Pennsylvania, and then Harris tonight here in Washington in a very symbolic speech.
Shep, on Sunday, it was basically a part two of the RNC. Even this time was bigger in the sense that his wife, Melania Trump, actually spoke and introduced him, something she did not do at the RNC. Why is he giving a press conference as well this morning in Mar-a-Lago? Didn't he already give his closing argument?
Well, he did, except he is feeling the pinch of the blowback. This event in New York on Sunday didn't age quite the way they had hoped. They wanted to be able to leave New York with an aura of inevitability and, the sense that they really had the race locked down. But instead, we saw that some of the language that we had heard, the racist, the misogynistic comments that we heard on Sunday, those risk undermining him with key voting blocs, not only women, as we just mentioned, but also with black voters and Latino voters that he has been trying to court for months. So we're going to see him today try to somehow extend an olive branch there and also put some of the blame for what we're seeing in the economy and elsewhere, and especially the border, back on Kamala Harris and the Biden administration.
Hey, Mike, good to catch up. Look out for that a little bit later. Mike Shepard there down in Washington, D.C. To continue the conversation, John Leeper of Eurasia Group joins us now. John, let's just start with the Harris campaign, accusing the former president of being a fascist, drawing parallels with Nazi rallies of decades ago. When you look at the polls, when you look at where things are at, a week away from the election, is any of it landing?
No, doesn't seem like it. I mean, nothing's moved in this race except for one big event, which was Joe Biden dropping out. And otherwise, it's been pretty steady. You have seen some movements among subgroups, particularly independent voters, which were shifting towards Harris and now moving back towards Trump. But you look at kind of any of the big set pieces of the campaign, the DNC, the RNC, even Trump's assassination attempt, you weren't seeing big movements, and you're not really seeing them in the closing days. In fact, one of the big markers of this campaign has been how incredibly steady it is and how most people's views of both of these candidates are totally baked in.
John, I was thinking a lot about this last night, how a lot of this is culture wars kind of coming to the fore. It's the reason why we're seeing a massive gender gap. And on one side, you have the preeminence of cancel culture and sort of people who are really looking for potential issues. And then you have other people who say anything and it doesn't really register. That's why I think it's notable. Has this incident at Madison Square Garden broken through in a way that some of these other comments really haven't?
Well, I think the risk is that it's a really close election, and you've got about 500,000 Hispanic voters in Pennsylvania, many of whom are from Puerto Rican origin. So it's entirely possible that it doesn't take a big movement in the polls or even a big event that's going to be the thing that decides this election. I mean, it would be extremely ironic if it were a unfunny joke from a no-name comedian at an unnecessary rally in Manhattan that ended up costing Trump this election. But an election where the two candidates are going to be separated by as few as 10 or 20,000 votes, that is completely plausible in this election cycle, which is why these Puerto Rico comments and then the other comments from the Manhattan rally are resonating so much and has Trump trying to do damage control.
John, what do you make, given how close this is, of the fires for the ballot boxes that we saw in Washington state? Some of the, supposedly only 100 or a couple hundred different ballots were destroyed. But how much is there that risk going forward of this type of activity increasingly?
Yeah, I think there's a lot of risk of that. And you have to acknowledge that the Republicans have been convincing themselves for the last 4 years that the election was stolen. And in doing so, have basically studied some good techniques of how to try to steal an election. So I think that's a big factor. I mean, I don't think it's going to end up being a big factor here. But the thing that I think we should keep our eye on is people's trust in the system. So one of the problems with trying to tampering with trying to tamper with the ballot box is you don't know whose ballots you're burning. So you can target different neighborhoods and have, try to go after different demographic groups who you think have a higher propensity to vote one way or the other. I mean, Washington State is not going to vote for Trump. We know that. I do think that this is going to be an issue where people lose faith in the process if they see that proper safeguards aren't in place to protect the sanctity of every single person's ballots. And that long-term has a really negative effect on people's belief in the fairness of the system. And it's how you get a majority of Republicans believing the last election was stolen. And I think that's a very dangerous and disturbing trend.
Washington State's not going to vote for Trump, but where this ballot box was, it's in a congressional district where the Democrat incumbent is facing a very tough challenge from Republican. Just when you look at the map, John, right now the Harris campaign thinks they can hold the blue wall. The Trump camp thinks they can at least take one of those states. When you look at Wisconsin, Michigan, and Pennsylvania, which one is most ripe to flip?
I think, to me, it looks like Harris is the weakest in Michigan. She's got big problems with Arab American voters, and she's been a little bit weaker with white voters than she's been in other places. And so I think that's the place where the Trump team thinks they have probably the best opportunity. Pennsylvania is obviously the biggest and most important state and the one that is very, very close in the polls. Wisconsin seems like it's shaded a little bit towards Harris. So if I had to choose one, I would say Michigan is going to be the big battleground in this election.
It's interesting you chose Michigan because in Wisconsin and Pennsylvania, those are the two Senate races that are now looking more like coin tosses when they were lean Democrat. Do you think those Senate races could go red, but the top of the ticket and those states go blue?
Yeah, again, I mean, it doesn't take much in this cycle for you don't need a lot of split ticket voters for something like that to happen. I think all three of those races are competitive. In Wisconsin, Baldwin, and in Pennsylvania, Casey has the benefit of being incumbents, and incumbency brings high name recognition, and that does help incumbents survive even very good challengers in a decent year for the out party.
Hey, John, good to get your thoughts, as always. John Lieber there of Eurasia Group. Thank you, John. This should have been the envy of the Harris campaign. Donald Trump, the former president, in the Democrats' backyard with a sellout Madison Square Garden with energy for a campaign we've never really seen before in this country. And yet, as John put it, overshadowed by an unfunny joke by a no-name comedian at an unnecessary rally in Manhattan.
And it's not the media that's really having the criticism here. Of course, they're going to critique it. But it's the fact that Republicans had to come out and denounce those comments. Why? There's a large swath of Puerto Rican voters in places like Pennsylvania, in Philadelphia, some 300,000 individuals of Hispanic descent. Half of those are Puerto Rican going to be voting. In places like Florida, why Senator Rick Scott had to come out. And this is something that can hurt any campaign when the margins are so thin, when you can win or lose a state by 10,000 votes.
The Trump campaign will be hoping the news cycle moves on and moves on quickly. We'll be moving on. Equity futures right now on the S&P 500, negative by 0.1%. Up next on a program, pricing in election risk. We'll catch up with Dean Kernert of Macro Risk Advisors on the volatility playbook with 1 week until election day. From New York City, futures negative in the bond market, taking out 430 on a US 10-year, yield to higher by 2 basis points. This is Bloomberg.
global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact, a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bouncing back from a week of losses in yesterday's session, equity futures on the S&P just slightly softer. We're negative by 0.05%. The Nasdaq 100 slightly positive. Bear in mind the Nasdaq is not coming off the back of a week of losses. 7 weeks of gains on the Nasdaq 100, bucking the trend last week. Thank you, Tesla. A little bit later, Alphabet after the closing bell. We'll talk about that in a moment. The small caps on the Russell down by 1/3%. One to watch in the bond market, the front end of the curve. If we get a 7th consecutive day of climbing yields on a 2-year, that's the longest streak going back to May 2023. We are up marginally this morning on a 2-year 414. Lisa on a 10-year taking out 430.
So Mark Rowan, who you spoke with of Apollo, was talking about how this is not an economy that's particularly landing, and he really does follow the Torsten Slok view of the world. And he, among other executives, his compatriots over in Riyadh, were talking about how likely it's unclear whether the Fed is actually going to cut by two 25 basis point rate cuts this year. There is a feeling they might have to rethink it based on how much better than expected the economic data has been coming out, even at a time where inflation has been coming down. So the reason why Thursday is going to be really interesting with core PCE.
The problem they've got, and the problem we've all got, is this debate won't be settled anytime soon. This data is going to be so noisy this month. If it's weak, we'll say it's not for cyclical reasons, it's hurricanes and strikes, and if it's strong, it must be really strong.
Well, and this really comes down to earnings, I think, because at a certain point you have to understand how much there is this secular overlay of a technological investment cycle that's really boosting growth and boosting potential inflationary forces in a way, at least in the near term, that sort of defies the way it was pre-pandemic. In other words, we might be looking at a higher neutral rate. It's a fancy way of saying that, and I think people are grappling with that.
The estimate for payrolls on Friday in our survey still around 110. If you switch up the board, turn the page and get to the foreign exchange story, the euro just rolling over in the last 30 minutes or so into negative territory, holding on to 108. The dollar stronger for 4 consecutive weeks through last week, the longest run since June. The move in the bond market breathing some life back into the US dollar, which was left for dead only a few months ago when we were looking at 50 basis point rate cuts from the Fed and we had dollar bear after dollar bear on the program.
How much are people looking at the idea that the economic data has come in better than expected? And oh yeah, the people have been expecting that if Trump wins, and even if there's a red sweep, what will this do? It'll be the US's action and the rest of the world's problem, and the dollar will gain. And that's basically what you're seeing in the market. So how much is this tied to that belief, sort of how the market is positioning for Trump to win the election?
Euro dollar 108.09. Under surveillance this morning, Goldman Sachs CEO David Solomon touting the strength of the US economy in an interview with Jumana over in Riyadh. Solomon saying his base case is for the US to achieve a soft landing with a better outlook for deal making. He's basically putting some doubt on the moves from the Federal Reserve after the next 2 meetings, let's say. And we've heard that repeatedly from a lot of economists as well, that maybe the next 2 cuts might be easy. After that, we're kind of in no man's land.
Yeah, yesterday we heard that potentially there could be no rate cuts in the first half of next year, which would definitely be different than a market that is pricing in an additional 100 basis points of rate cuts. I am curious how much we are trying to figure out in real time what the new neutral rate is at a time where there is this sort of latent growth in the economy. economy, frankly, what I hear from executives is more of a bet on that than the election, more of a bet on that than even Fed policy.
He's sounding optimistic, though, about the trajectory of the U.S. economy, basically this idea of U.S. exceptionalism. His concern is things like in the Middle East. So kind of reiterated, Jonathan, what he said to you in May about how the U.S. is doing well and Goldman is doing well. When it comes to the election, he is excited for clarity. He said the markets want clarity. And then what he's also excited about, but on the edges, he talked really about this, the prospect of potentially a different environment for deal making, AKA who will be leading the FTC. Now, if it's a Trump administration, we know how J.D. Vance feels about Lena Khan, but we do know how Donald Trump feels about deregulation. So likely she would not get another term under Donald Trump.
I'm pleased you said that because it's important. Corporate leadership wants clarity. What kind of deal can you actually close in America right now, given the pushback we've seen to things like Tapestry and Kroger as well?
Yeah, this is the reason why we see and hear about this backlog in potential M&A transactions that are waiting for some sort of clarity before they engage. I think, though, to Anne-Marie's point, I think she's spot on. It's very unclear whether, even if there is a change atop the nation, whether there'll be a change atop the FTC, given some of the recent comments.
That's one to watch, the latest out of Riyadh. What are we calling that? Davos in the desert? Is that right? Okay. More on that over the next couple of days. Let's turn to Boeing, raising $21 billion in an expanded share sale. The plane maker looking to shore up the company's balance sheet and stave off a credit downgrade. A crippling labor strike now in its 7th week. The stock this morning, Lisa, down 1%.
You know, I was looking at some of the numbers, and this is a company that's burning around $4 billion in cash they're on track for the fourth quarter. They have been hemorrhaging something like $14 billion as a result of the strike, as a result of some of the questions around the safety of some of their jets. It's one thing to sort of raise cash to build up after this thing is done. It is another thing to get it done and to get some stability to really build off of, let alone understand what your business model really is going to be.
Sheila Kohler of Jefferies came on the program a month ago and said this would be 6 weeks. After 6 weeks, basically once you calculate the pay increase offset by what they're not getting paid, these guys are going to come back to the job. They're not coming back to the job.
Which raises this question of what it will take to get it done, because they got an offer for a pretty significant pay raise. The White House said, come on, guys, try to get it together. This is going to be important for us. And still, we're left here with them burning cash and raising money to begin the build after this is over. We don't have a sense of when that could be.
Tens of millions of dollars every single day as these workers remain on the picket line. It's amazing they were able to get this deal done before they were able to get the workers back. And what's so interesting, I think why everyone was so shocked that that last deal did not go through, is because at what point are these workers going to say, I need to get paid, and also they are now no longer receiving health benefits? That is a big hit to individuals.
That's the latest on Boeing. This is the latest on Ford, lowering its full-year earnings forecast due to warranty costs and hurricane disruptions. The outlook making it a stark difference to GM, which raised its full-year profit forecast for the 3rd time this year. That stock is down in the pre-market by 6%. And what a stark contrast over the last week. GM, pretty decent. Tesla, knocked it out of the park. Ford, a struggle.
Well, Tom Narayan yesterday said that they have a similar issue to Volkswagen in terms of the backlog, or Stellantis, excuse me, was the backlog of some of the inventories. And a real question of what is the big distinguishing feature? Is it just product mix? Is it a question of how much they devoted their business to electric vehicles and how much that's still burning cash? Some real questions about the distinguishing features of the successors versus the successful auto players versus those that are flat in their backs.
What took me with Ford yesterday is they said, we've taken costs out. We are trying to cost costs. They did remove $2 billion in materials and freight and other things, but they said we are not cutting as quickly as our competitors. Everyone in the auto industry right now is also trying to cut costs.
Ford getting hammered in the pre-market. More on that a little bit later this morning. Let's turn to the election, just 1 week away. Dean Kernan, macro risk advisors, writing the post-election vol levels are extremely high relative to the recent movement in assets. The post-event earnings election Fed CPI referendum playbook for volatility is that it heads lower once the information is out. Dean joins us now for more. Dean, welcome to the program. What does that very simple observation mean for what our approach should be to event risk in the next week?
Yeah, I think right now the equity market's pricing implied volatility as the catastrophe bond market would price before an event. In other words, it can be sunny day after day before a Milton is coming, but you know it's coming. And so you sort of have to brace for it. Right now, the market's not moving very much at all. You've got 1 month realized volatility in the S&P at about 9. That's not enough to scare anybody into hedging. It's a really difficult situation because you've got something on the calendar that's consequential. And as you were referencing before, Harley Bassman's move index really prices this potential of a gigantic move in bonds, especially. And that's a vol risk premium, as we like to call it. It's basically the spread between implied and realized. That's across assets, that's equities, that's bonds. You see it in certain foreign exchange pairs as well. You also see it around the world. So the U.S. is basically exporting its election uncertainty around the globe. The playbook historically, I've studied this quite a bit through events like Brexit, events like the 2020 election, all of which are different than the current financial climate. But the playbook is that into the event, vol is very sticky, hedging costs are very high. And then once the information is out, volatility comes down. And so it poses specific and interesting challenges for hedgers, because when you hedge, you're effectively betting that the market could move in an unwelcome way, but you have to also try to think forward as to how well your hedge premium will hold post the event. And history tells us that it doesn't hold all that well post the event.
Dean, there's a lot to unpack there, but one key phrase: once the information is out. Is there a risk this time around compared to, say, 2020, 2016, that it might take a long time before we actually get said information?
It's a great point. I've been really thinking through these betting sites and trying to understand whether it's the whale, as you guys have reported on, a couple of folks with some capital moving the odds in Trump's direction, or is there real marginal information content that we should pay attention to? I think most would say that if Trump wins, that the challenges will be, considerably less from the Democratic side. Who knows? Maybe the black swan is that the Dems will really challenge this as well. But Jonathan, I think one of the things we're supposed to really focus on as equity investors is the bond market. I'm very troubled by the 70-odd basis point increase in 10-year yields post the Fed ease in September. That's just not something we would typically expect. So if the goal for Fed policy is to ease financial conditions, at least that part of it, and that's a main part of financing costs, for companies, for mortgages and so forth, it's not working. And what that move index is telling us is just a significant amount of uncertainty in the risk-free asset class. And what we've learned in the last couple of years is that equities can succumb to higher bond yields. The market is bracing for an outcome in which bond yields, go up and stay up. And I think that's really a risk as we talk about quarterly refunding and this just endless supply of capital that the U.S. needs to run itself.
Dean, I want to understand what the argument that you're making a little bit more. There's this question around the 70 basis point increase that we've seen in 10-year yields since September 16th, 2 days before the Fed meeting, and a question of whether this is a commentary on the Fed cutting too early or igniting some optimism about growth with a more or less restrictive Fed policy. And then there's a question of how much this is simply a reflection of bonds as the risk asset at a time of incredible uncertainty in the U.S. political sphere. I'm just wondering, from your vantage point, which of these two scenarios are you seeing as the more likely reality?
Yeah, I think there's almost three scenarios. One, you might map higher bond yields versus the increasing odds of Trump on betting sites like Polymarket. Second, you can point to better economic data, Citibank economic surprise indices going up in concert. And then the last one is just perhaps the world has had enough with U.S. debt. Obviously, we're still the reserve asset. That's not going away anytime soon. So we should respect that. We should also respect the history of market prices, even for liquid assets like the Treasury market. There is the potential that prices just gap out. We saw, I think it was last August of 2023, that is, we had that bear steepening event. The market basically said, in some ways, no mas for the additional supply that was coming. And I just feel like we push up against that without a real credible discussion around deficit reduction. Neither candidate has really expressed any interest at all in deficit reduction. So I kind of come out of this, Lisa, with the idea that there is an opportunity for investors to hedge Boy, the S&P has got to be the best benchmark in the entire world. Over the last calendar year, it's up 41% with 12 realized volatility. This is just an unbelievable Sharpe ratio. So it's almost impossible not to be invested almost fully. It's a very difficult benchmark to beat. And so you have an opportunity to take some of those gains and put it towards hedging trades, not ones that break the bank, but ones that can hedge you for, a modest slide down post-election in the market.
Dean, just quickly here, you talked about the MOVE index, Harley Bassman, talking about how right now it's implying about an 18 basis point move in either direction for a benchmark yields. I'm just wondering, based on the correlation that you're seeing across assets, could a move like that, given some of the potential lingering uncertainties, really trigger that decline, that gapping out in prices, not just in bonds, but also elsewhere in equities?
Yeah, we have some experience, right? We saw the joint drawdown in stock and bond prices in 2022. Some would say it was a controlled equity drawdown. But, up here at 430, maybe on our way to 450, we've got to keep a close eye on it. At some point, the stock market is just not going to be satisfied with higher bond yields and what they potentially imply for, choking off of economic growth.
You wonder how close we are to that moment. 430 on a 10-year. Dean, appreciate it, sir. As always, Dean Kernert there of Macro Risk Advisors. Equity futures on the S&P 500 negative by close to 0.1%. With an update on stories elsewhere, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Shares of HSBC trading higher by 3.7% in the London trade. It announced a fresh multi-billion-dollar stock buyback and reported better than expected earnings. Those results driven by its wealth arm, which benefited from higher private banking volumes in Asia. Just days ago, HSBC unveiled a major overhaul of its business to merge its global commercial and investment banking units. The top prosecutor in Philadelphia is suing Elon Musk and his Trump super PAC. District Attorney Larry Krasner says that Musk's daily $1 million giveaway is an illegal scheme to influence the election. The giveaway, which is already under scrutiny by the Justice Department, purports to randomly reward voters in 7 swing states who sign a petition from the PAC. Musk's allies have argued that the giveaway awards people for signing a petition, not for supporting Trump. The Dodgers are on the brink of their 8th World Series title after sadly beating the Yankees 4-2 in Game 3. A first-inning home run by Freddie Freeman puts the Dodgers up early, and they never looked back. The Yankees were hoping for a boost from their offense, but only managed 5 hits, with slugger Aaron Judge continuing his playoff slump. The Dodgers are looking for the first World Series sweep since 2012, while the Yankees will try to become the first team in history to come back from a 3-0 deficit. And that's your brief, John.
Danny, thank you. Tough evening for New York sports. The Knicks, the Giants, and the Yankees as well. Is Judge going to turn up?
It's a crime. The Judge needs to turn up. I finally know what it feels like to be a Mets fan.
Really?
All this adversity.
Gratuitous kind of day.
All this adversity, you just gotta believe.
Honestly, I was just going to say, I was hoping for a good game and a good series, and it's unfortunate that the Yankees haven't been able to rise to the occasion.
That's so nice of you, Lee.
You can continue this in the commercial break. Up next on the program, separating the signal from the noise.
For payrolls, you probably will see a significant impact from the hurricanes, but the Fed's just going to, and markets should also just look through that and see what's going on apart from those areas.
That conversation up next, live from New York. You're watching Bloomberg TV.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This just in from Barclays. Investors confronted with one of the most pivotal weeks in markets this year. I would say the last few years. A big week coming up for financial markets worldwide. Equity futures on the S&P just about unchanged, and the bond market yields a little bit higher earlier on in the session through 430 for the first time since July. 429.42. Under surveillance this morning, separating the signal from the noise.
You know that jobless claims did pick up a little bit a couple of weeks ago, and that was very clearly the effect of the first hurricane that hit the southeast. 2 weeks later, we had the second hurricane. For payrolls, you probably will see a significant impact from the hurricanes, but the Fed's just going to, and markets should also just look through that and see what's going on apart from those areas.
So here's the latest. Investors looking to work through a noisy jobs report. The median estimate coming in at 110K among a wide range of estimates. Jay Bryson of Wells Fargo anticipating 75K and writing, it will be difficult to get a clean read from the report. The ongoing strike at Boeing has sidelined 33,000 union workers. In addition, payrolls are likely to be depressed from the devastation caused by hurricanes Helene and Milton, the latter of which made landfall during the survey week. Jay joins us now for more. Jay, welcome to the program. Let's kind of try and break this down. When you go through the drag, how much is going to be union strikes? How much is going to be hurricanes? And how will we get a clean read on what is and what isn't cyclical weakness?
So, John, to your last point, it's going to be difficult to get a clean read on the cyclical weakness. But, you know, just to kind of level set here, so we know 33,000 people from Boeing are out on strike. There's probably a few thousand people who are not unionized, who are furloughed, who will also be affected by that. And then, you know, if you look at, say, continuing claims of the survey week, they were up about 30,000 from the week before. So these would be people who are showing up from Hurricane Helene in the mountains of North Carolina, and then initial jobless claims also remained a little bit elevated in the survey week. This is probably people from Milton. So the way we're thinking about it is your underlying run rate, we believe, is somewhere around 150, 160. You knock off, let's call it 80,000 or so from those two different events there, and that's how we come up with our number of 75,000. But there's going to be a lot of uncertainty here, and it's going to be, as you'd say, difficult to get a clean read on the signal and the noise.
Jay, how much are you focusing then on the unemployment rate as sort of the cleanest among dirty data points?
Yeah, so that's going to bump up too a little bit, Lisa. You know, so we were at I think it was 4.05. I mean, it was almost a 4. We would expect that to go up to 4.1. Now, if that shoots up to 4.4, I mean, then you have to start digging into it. You know, something going on with the labor market there that's causing that. You know, what's causing all of that. So it's going to be a little bit difficult to get, you know, kind of a clean read there as well. But, you know, again, I think most of this stuff is temporary. When you look at all the other indicators out there in the economy, you wouldn't expect the labor market to be falling apart right now.
What I find fascinating is how much the bias in markets has shifted. Back in the summer, we were expecting the strength, and then that weaker than expected jobs market dropped, and boom, that was the last time we saw the levels that we're currently seeing on 10-year Treasury yields. How much is this a market biased towards strength? And that if actually these numbers come in better than expected, suddenly you see a bigger reaction than the other side.
Yeah, so, you know, if they do come in better than expected, I mean, obviously that's just showing you the underlying strength of the U.S. economy. Now, we're a little bit skeptical about the strength of the last month at 254,000 jobs. You know, it seemed like, you know, education and healthcare hiring was very strong. I mean, it's been strong, but it was super strong last month. The same thing goes for leisure and hospitality. So I wouldn't expect, I mean, I would expect to see some sort of payback going on there. But, you know, if you don't get payback there, if you get 2 consecutive months of really strong hiring in those two particular sectors, then I think you got to look at that and you say, wow, you know, the U.S. economy is a lot stronger than we believe right now.
So, Jay, how big do you think the revision could be for the September print?
Well, we don't really factor in the September print too much at this point. It's difficult to know because that's been swinging around a lot lately. You know, obviously, if there is a downward revision to that, then, you know, that obviously tells you something there. But I think the main focus here obviously is going to be on the October sorts of prints, and that's, you know, again, where we expect to see some of that weakness.
Jay, is there any kind of print that would stop this Fed from cutting interest rates a week tomorrow?
From cutting interest rates a week tomorrow. Yeah, I mean, you know, John, I think if you are, you know, let's say you get, it's argument's sake, 150,000 sort of number, but you have big decline in manufacturing because of the Boeing strike, and you have big decline in some of the other sorts of sectors around there. You still got 150,000 sort of print, some 150, 175, something like that. Maybe the market starts to price out the probability that the Fed go, you know, maybe they wait in November and push it back off to December.
Interesting. Jay, thank you, sir. Jay Bryson there of Wells Fargo. That meeting begins a week tomorrow, concludes, of course, next Thursday at the Federal Reserve. Just a shift because of the election week. The range of estimates in our survey, 110 is the median. -10 is the low. That comes from Bloomberg Economics. The high is 180. Comes from Steve Rasciuto over at Mizuho.
I would argue that if you see an increase in the quits rate from Digital's report that we get later today, if we get higher than expected core PCE on Thursday, and then an unemployment rate that actually drops in any kind of meaningful way on Friday, you could set yourself up for a real messy Fed meeting next week.
That would be quite a mix for the Federal Reserve, that's for sure. This conversation will continue. We'll catch up with Lisa Shallard of Morgan Stanley Wealth Management in just a moment. We'll speak to Jessica Taylor of the Cook Political Report, Mandeep Singh of Bloomberg Intelligence, and former World Bank President David Malpass. The second hour of Bloomberg Surveillance just around the corner, with equity futures on the S&P 500 just about unchanged. From New York, this is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And, you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
There's really no macro theme that's driving markets.
I think we have to be concerned that a slowdown could be coming.
The bond vigilantes are definitely mounting up.
The solid growth story continues to be an underlying part of this Fed rate cut cycle.
The next couple of cuts, I think, are baked in, and I think that's justified.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance begins right now with equity futures on the S&P 500 just about unchanged. Likewise on the NASDAQ 100. Allow me to set up the next week. Let's start with the earnings. Today, after the closing bell, we'll hear from Alphabet. Tomorrow, Microsoft and Meta. Thursday, Amazon and Apple. Friday, the payrolls report. A week today, an election in the United States of America. 2 days later, a Federal Reserve decision. What a stacked week we've got coming up. One of the biggest weeks for years in financial markets worldwide.
Pretty much every catalyst for uncertainty in markets is coming to the fore with some sort of maybe resolution. We're going to get a Fed decision when they're widely considered to cut by 25 basis points. Will they, based on the data? And then, of course, the election. A question here of how much of a relief rally we're really being set up for, given the extremity of just how much uncertainty is baked into the market. I love these notes. Is this exciting? Is this anticipation, or is this just holding your breath until we finally have an answer?
Well, according to Dean Kernan, it's a bit of angst, and what the U.S. is exporting right now is that election anxiety to global markets around the world. When you look at the election 1 week out from now, the market is pricing in a Trump rally. There is this idea, though, of potentially this event. Remember, Republicans were feeling this excited during the midterms of 2022. And Libby Cantrell over at PIMCO says that, yes, if the pollsters right now are underestimating what we've seen in the past for the support the former president has, then he wins. But what if they're underestimating like they did in 2012 with Obama, and they're underestimating potentially some of these younger voters, these first-time registered voters, many women that could come out and vote for Harris? How is that market going to recalibrate some of this Trump trade they've already baked in?
Well, we know what this market's doing right now. It's leaning into a long dollar, short bonds, long U.S. equities versus rest of the world position. How vulnerable are those trades into next week?
Honestly, this is one of the biggest questions that I see being raised by every single different house, and everyone comes up with a slightly different answer. How much this time is different. Mike Wilson over at Morgan Stanley talking about how the positioning generally has a sort of 2016 playbook, but is different in a couple of different ways. And he points out, and I think that we keep coming back to this, this is an election where Donald Trump is actually the favored candidate. That was the opposite going into the last election in 2016 when he won. So how much has this been baked in versus some of the uncertainty around what that even will mean?
That's the week ahead. We've got to deal with some earnings through the next 12 hours or so. We've got numbers from Google coming after the closing bell. McDonald's this morning, third quarter comp sales coming in at negative 1.5%. The estimate negative 0.67. Revenue for McDonald's, 6.87 billion. The estimate 6.81. Now, this is for the third quarter. We know that things are going to get a little bit more difficult in 4Q given the difficulties they've had in the last week.
The issue for them is the international markets also. Yes, we're going to have U.S. issues. U.S. was the strong point, but now there's this question about E. coli and onions, and they're pulling quarter pounders, and that's going to be a problem. But they already are facing a lot of pressure in international markets, such as France, China, UK, Middle East, and this comes with protests. We saw the same kind of trend with Starbucks also facing some of that pushback. So some of these consumer international companies, how much are they going to feel the brunt of some of the disgruntlement with the United States outside of the shores?
Stock is down in the pre-market by 0.6%. Equity futures on the S&P just about unchanged. Want to take your attention, just draw your attention away from stocks for a moment and go to the bond market. The 10-year went through 430 this morning. The 2-year yield is higher for 7 consecutive sessions. That's the longest run since May 2023. We're talking about a 50 to 60 basis point plus move since this Federal Reserve cut interest rates.
68 basis points since September 16th on the 10-year yield. It is just shocking. And Dean Kernett's saying he thinks that people haven't made enough of this, that we've been so consumed by the election, by earnings, by other developments. There is a big question why. Is this because people do expect that the Fed is maybe cutting too much too soon? Or is this really a commentary on Trump? Or is this just simply that the U.S. economy is doing just fine and the new neutral rate is far higher than a lot of people used to think?
Can I suggest that Dean might have been watching the wrong news channel if he thinks we've been ignoring the bond market?
Fair
There's
point.
such a big, heavy flavour to this programme of fixed income, isn't there?
We could talk about auctions. They were not that great yesterday.
They were 2s and 5s, right?
Yeah, there were 2s and 5s. Today's we've got $44 billion of 7-year notes. Watch this space. I know I keep saying it, but it's actually getting more interesting because the tail that you're seeing on these really expresses some of the hesitance people have.
Is that enough bond chat?
No, never enough.
Okay. Coming up this hour, Lisa Challet of Morgan Stanley as markets bounce back from last week's losses. Mandeep Singh of Bloomberg Intelligence previewing earnings from Alphabet. And we'll speak to former World Bank President David Malpass on Trump's economic policies. We begin this hour with stocks inching higher ahead of Google earnings. Lisa Challet of Morgan Stanley writing the following. Markets have been extremely active over the past month as traders have juiced up the already Bullion scenario, baked into equity valuations, adding improved odds of a Republican sweep to the list of goodies already discounted. Lisa joins us now for more. Lisa, that's quite a quote. Good morning to you.
Good morning.
Are you suggesting this market's gone a little bit too far? Are things stretched?
Absolutely. I mean, you know, we've been talking about for a while that on a valuation basis, this is a very expensive market on very ambitious earnings expectations. Let's just take a step back and think about what companies have reported. All right. If you look at the 12-month trailing earnings for the quarter ended June 30th, year over year, S&P 500 profits, including the Mag 7, were growing at about 5% year over year. In the quarter so far, what's been reported, and the Mag 7 haven't all reported yet, we're up 3%. The expectation for full year 2024 is we're going to get to a year over year compare up 9-10%, and then next year we're going to accelerate to 15%. So these are ambitious reacceleration numbers. And so, you know, when we think about what's baked in and why we said there's a lot of goodies here, there's a view that we're going to get that reacceleration. It's going to be based on margin expansion, profit margins that are higher, but it's going to be so-called immaculate. We're not going to cut jobs to get there, which means, you know, you've got to get productivity gains. And with all of this wonderful news happening, the Fed's going to keep cheerleading from the sides and cut, you know, 25 bips a quarter at least. And then the latest is, you know, all goes well. We get a red sweep in Washington. There is no more regulation. We get goodies like tax cuts.
No more taxes either, apparently.
And the world is a wonderful place. And so I guess, you know, from where we sit, we just look at risk premiums. And so, you know, as Lisa was just talking about the importance of this move in the Treasury markets, why are stocks shrugging it off? Right? I mean, typically this kind of move on the long end of the curve particularly as underlying real rates approach 2%, which historically has been that obstacle for stock valuations. I think it's a bit dangerous for the stock market right here to be shrugging this off. This is a significant move. We've seen moves in the real rate, in inflation expectations, in term premiums, in auction performance. And so I'm very focused on watching these moves in the yields.
And the bond auctions, which is the reason why we will always welcome you on this show, Lisa. There's a question here about whether yields rising for the right reasons will actually be supportive to the equity market. And that's been an argument that a lot of people have made, and we've gone over quite a bit on this show. And there's a question of why you think that the yield rise that we're seeing right now is for the wrong reasons, or if it doesn't matter. It has breached that threshold where it needs to be something that stock investors start to pay attention to.
Look, I think that the bond market has this right. I do think real growth has been better. I am in the camp that says inflation expectations and the potential for an inflation boomerang next year is actually rising, especially if you bake in the part of the story about a red sweep. You don't get the red sweep with, again, all the goodies, but none of the collateral damage, which, as we know, tariffs and closed borders could be inflationary. So, I do think that the bond market is anchoring on, some hypotheses that's very anchored in the data. And I do think that the stock market is going to have to wake up and pay attention at some point.
So what do you do with that? I mean, do you just sort of go into gold and go into a bunker and hope for the best?
So what we're doing is we're really focusing on value and diversification. We're saying valuation in this market matters. So we're playing in the parts of the stock market that are somewhat cheaper, quite frankly. And so that has included some of the value cohort. It's included financials. It's included a handful of industrials, a handful of healthcare stocks. And that's really been our approach, is to say, let's even it out. Let's not take very big bets here and aim for some diversification.
Financials is a Trump bet. And yet you're saying it's actually a very different bet.
I thank you for pointing that out. Yeah, our preference for financials is not premised necessarily on some big deregulatory push. We think, that Basel II endgame easing of those capital requirements is going to happen regardless. We think that that's already, kind of been signaled by regulators. What has us excited about financials is not just the potential for cost cutting and operating leverage, but the capital markets activity really looks like it's going to come back over the next 2 years as, financial sponsors and the private equity guys finally get off the sidelines with these kind of market valuations and start transacting and doing deals.
Lisa, with the red sweep, you get the goodies along with some of the potentially the bad things that can hurt the financial markets. But what if it's not? What if the polling and the betting markets are underestimating the support Kamala Harris and some of these Democrats have with issues like abortion? How are you going to think about the next few years?
Yeah, so look, I think that there's, a Harris win at this point. I do think markets would be surprised. I do think we get somewhere between, a 2 and 5% pullback on that, because I do think that there's been, some pretty big rotation. But I think you get a lot of status quo type moves, right? I think we continue to get a continuation of the fiscal stimulus programs that we saw under the Biden administration. But we don't get necessarily, some of the issues and the inflation threats. So we continue maybe on this soft landing trajectory as opposed to this no landing trajectory. So I think the bond market comes back in as well.
But, so you think the bond market comes back in?
I think yields come back in.
Even with all that fiscal spending?
Yeah. I do, because her plans, if you actually do the analysis, and our team has done it, fiscal deficits under her current plan are going to run about half what he's proposed so far.
So hard to game this out. If you think about 2016, and we always go back to this, Trump was bearish for markets up until the night of the election, and then we woke up 2, 3, 4 a.m. in the morning, and all of a sudden it was bullish. We go to 2020, throw the scenarios out the window. We got the vaccine efficacy data in November of 2020. Everyone seems to have forgotten about that. It had nothing to do with the election at all, and markets, Lisa, absolutely ripped that month.
Yeah, so here's the question. How much is it the setup going in versus the actual candidate themselves? And this time around, and we've talked about this, if he can implement the tariffs, but he can't get rid of some of the regulations and the taxes unilaterally in the same speed, does that change, that dissonance change the reaction function of markets?
Lisa, this was a clinic. It's good to see you. Appreciate
Great
it
to
as
see
always.
you.
Thank you for coming in. Lisa Shannett there of Morgan Stanley Wealth Management. Equities just a little bit softer here. We're down a little more than 1/10% on the S&P. With an update on stories elsewhere this morning, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. McDonald's reported third quarter sales that missed estimates. Shares down nearly 2%. Had weakness in international markets. The U.S., though, was a bright spot, growth of 0.3%, more than expected. Analysts and investors are already, though, looking ahead to the fourth quarter, trying to assess the impact of an E. coli outbreak linked to Quarter Pounders. Apple has started rolling out its first set of Apple Intelligence features alongside a new iMac desktop that has an AI-focused processor. The AI software is now available for iPhone, iPad, and Mac. Although Apple previewed a broader set of capabilities in June, some of the most anticipated features that include a ChatGPT integration, those are not arriving until December. Amazon founder Jeff Bezos is defending his decision to block the Washington Post from endorsing Kamala Harris. The Post owner says that ending endorsements address a credibility gap in the media industry and denied that there was any sort of quid pro quo with Trump. In an essay published on the Post website, Bezos wrote that endorsements create a perception of bias and regretted the timing of the decision. And that's your brief, John.
Danny, thank you. There is a deep irony about this moment in news media that the accusation of bias is leveled at people who want to drop endorsements, not the people who want to continue them. I think it says a lot about the people complaining about what they really think about this. It's not about being neutral. It's not about endorsing. It's about endorsing a particular candidate that really matters here.
Well, I think the issue that Jeff Bezos is facing is that CNN was reporting that the CEO, Jassy, of Amazon had calls with the Trump camp, that Blue Origin met with Trump. So he came out because of this criticism and had to say, I have to be clear, there's no quid pro quo. Also, what I found interesting, Jeff Bezos says our profession, writing in this opinion piece. I didn't know he was a journalist.
He's one of us. Up next on a program. It's not really. Closing arguments on a campaign trail.
On day one, if I'm elected President of the United States, which I fully intend to be, I will be working on behalf of the American people on my to-do list.
Are you better off now than you were 4 years ago?
That conversation up next from New York. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Equity futures on the S&P 500 shaping up as follows. Here in New York City, futures down by almost 0.1%. Bond yields higher by a single basis point. Let's round it up, 430 on a 10-year. Under surveillance this morning, closing arguments on the campaign trail.
If he were elected on day one, he's going to be sitting in the Oval Office working on his enemies list. On day one, if I'm elected President of the United States, which I fully intend to be, I will be working on behalf of the American people on my to-do list.
And I'd like to begin by asking a very simple question. Are you better off now than you were 4 years ago?
So here's the latest. Kamala Harris making closing arguments in the nation's capital later on today, just hours after Trump speaks at Mar-a-Lago later this morning. The Cook Political Report writing Trump's closing argument, his campaign says, is this: Harris broke it, Trump will fix it. And yet, even with all these advantages, the race remains locked in a dead heat. The reason for this, of course, is Trump himself. The Cook Political Report's Jessica Taylor joins us now for more. Jessica, welcome to the program.
Thank you.
It's good to see you in person. Yeah. There is this stat in your research, and I'm going to share it with our audience. There is no Trump policy that comes without his polarizing behavior, style, and approach. In the September Cook Political Report Swing State Project poll, just 34% of voters said they liked Trump's policies and his leadership style. How much of a problem is that for the former president?
I mean, I think that if this were sort of a generic Republican, this race would probably be over. It's voters have to make a choice of, okay, you liked where the economy was under Trump, but you get all of the rest of this baggage that comes with him. So that's where we're seeing Harris's closing message. You know, he's an authoritarian. He's a fascist. This is the chaos, trying to remind them of people. And I think some of the things that came out of that, you know, Madison Square Garden rally, he's having to answer for them today. He's going to Pennsylvania, Allentown, where there is a large Puerto Rican Hispanic population, and that is now the story in this final week before the race. It's not focusing on, you know, how he would be a change. He's trying to make it a focus on how he would be a change from a Biden-Harris administration, but Harris and Democrats are arguing, yes, but he was a change, and you're going to get all of this chaos, you're going to get all of this sort of insanity back again.
Jessica, are you seeing anything in the polls that Trump is going to be able to go past that ceiling that he's basically been capped at?
Yeah, this is the real question, and this is why, you know, I think the polls, I think that's the thing at the back of our head, is that the polls were wrong in 2016, they were wrong in 2020, but like they're still capturing about where he was at. They sort of this 47, 48%, and that's what we haven't seen. We really haven't seen him grow his coalition. So the question is, I think with these undecided voters, do they sort of go over to him? Did they stay home? Does Harris get them in her coalition? I think that's the real question as we're looking at some of this swing state polling that's just very deadlocked.
And Cook Political Report now has it as a toss-up race for presidential.
Yes, all of the 7 swing states we rate as toss-up. So it is as close as it can be. I mean, the polls I continue to see out, private and public, all are within just 1 or 2 points, basically.
The financial markets, though, are pricing in a red sweep. Part of that has to do with the Senate map.
Yes.
And you've done some great work on actually senators that are defending seats, Democrats, in Wisconsin, in Pennsylvania, but actually might be toss-ups. What does the map look like today?
The map is favoring Republicans, and that's why if we're looking at a Republican trifecta, that's more the most likely to flip has always been the Senate. That's because Democrats have a 51-49 majority, but we already know they're going to lose West Virginia. John Tester in Montana is the underdog, so that gets you to 51 for Republicans right then. Then the question is, as you mentioned, the races that we've seen tighten up in the past few weeks have been those blue wall states. Wisconsin, Ohio is the next probably with Sherrod Brown. That's still a very difficult state, in a state that Trump won by 8 points, but I'm seeing tightening polls in Wisconsin with Tammy Baldwin and Eric Hovde there. In Pennsylvania, that's the race that we moved last weekend to toss up with Bob Casey and David McCormick there. Michigan still remains closer. I would probably still rather be slightly Alyssa Slotkin in that instance, but they're all very close. We've seen those races just, so I think as the presidential race goes, probably those Senate races go, because in 2016, every single Senate race went the same way as the presidential race. In 2020, only Susan Collins managed to win, even as Biden carried her state. So I think we're seeing a delta of just a couple of points. I think we could see split tickets in Arizona, for instance, where Trump is favored there, but the Democrat Ruben Gallego is. So.
Well, can you just walk us through what a red wave looks like, what a red sweep looks like, given the fact that not all Republicans are the same, not all Democrats are the same.
Yeah.
How much are we looking at Trump truly having a clutch over the Republican Party in a way where he could get through his policies very easily, even with just a simple majority.
I think that's why you see Republicans that are wanting to get to, 53, 54 seats, because if it's just a very narrow 51, 49 majority, the most important people in the Senate become the moderates. Lisa Murkowski of Alaska, Susan Collins of Maine, who's up for re-election in 2026 if she runs again. They have such a favorable map. They want to take advantage of this, especially if you see Trump winning. And I think the House is very deadlocked. You only need 4 seats one way or the other. We see that as a toss-up. And, there's some places where in here in New York and in California that are more Democratic areas that Republicans need to run ahead of. But then we have seats in Michigan that are, I think, going to be very, very close as well. So, I think that probably as the way the presidency goes, probably the House goes as well. But that's why Republicans want to sort of get that bigger majority, gives President Trump a possible cushion.
When we talk about what's going to potentially change the outcome, everyone talks about turnout and potentially who has the better ground game, who has the better early voting game. What are you seeing on that front?
Democrats have a very sophisticated operation. That is sort of their bread and butter, getting those people out, knowing where to target them. And then I do hear some concern among Republicans because the Trump campaign has largely sort of farmed this out to Turning Point USA, to Elon Musk. But then we also are seeing some encouraging early voting signs in places like Nevada, where typically have a very strong ground game there. Republicans are having have Republicans sort of learned to love early voting or encourage their people? So is this sort of cannibalizing their election day voting that we typically see as more Republican? Or is this indicative of just more Republican